Hi, Amy. Good morning. Don't hear anything. Is this my microphone?
Oh, I was muted. I apologize.
Okay, I thought it was me. I was panicking. I always try to log in early to work out my technology, and I always get scared when I see lips moving but no sound.
That's what I was doing as well, just so that you know, because I was like, oh, let me go in and log in or whatever, and then it wasn't working. So I had to get Dana's help this morning to get it logged back in properly. So, but we're working. We're good now. So let's see here. I'm trying to get the PowerPoint ready for you now. So yay. I'm going to give everybody just a little bit of time to log in, and then that way we can start from there. Let me just see here. Where did it go? I'm going to minimize you for just a second. Let's see. Let's see. Give me one moment. I'm just giving everybody a minute to log in because there's a lot of people coming in. So we're just going to kind of wait a minute for everybody to get in because I'm seeing the numbers ticking up. Okay, so this one is here. Okay, got that one. I'm going to give you guys a couple of different documents today. So, I've still got people coming in. Give me just a second. I'm going to give them just a moment to finish logging in. It's right at 10 o'clock or 10:01. So I'm just going to give them just a second to log in and then we'll get started. It's just going to take just a second. Okay. Okay, it looks like I have a lot of you in here. I don't know that I have everybody in here, but I think I got most of you in here. Let's see here. Okay, I see most of you are going on and logging down into the chat for me. Go ahead and put and please make sure you're doing this. Don't hit return when you're entering this information. You need to put your first name, your license number, and your email, first and last name, your license number, and your email. And I need the name that is on your license information. So don't put your common name that everybody knows you by. I need you to put what's actually on your license information. So if you'll go ahead and do that for me, if you're hitting return, it's only going to put your name, and then I'm going to have a random license number in front of everybody else's. You have to put your name, license number, and email all in the same thing. So don't hit return. You can separate it by commas. You can just separate it by spaces. When we print it out, we'll be able to see it just fine. But make sure that you enter your name, license number, and email, and then hit enter so that it'll save properly, if that makes sense, I hope. And then I'm going to get to a point where I tell everybody to stop logging in probably halfway through the meeting, and not to do that because I'm going to add a Excel spreadsheet for you guys so that you can have sort of like a little go by that allows you to sort of start tracking how much taxes are owed based on your expenses. It looks like most of you are logging in. If you do not need CE credit, you don't have to log in. That's fine. If you need CE credit, I do need for you to please make sure your camera's on. If you have a camera, it needs to be on. If you're not getting CE credit, you can leave it off. That's fine. If you do not have a camera on your computer, and guys, I'm not watching you eat your lunch. Don't care if you're brushing your teeth. Like, it doesn't matter to me. We're just really trying to get you your CE credits if you need them. But I do need your cameras on. If you do not have a camera, I need you to go into the comments and say that you do not have a camera. And you're going to have to log in every 10 to 15 minutes on the chat with your name, license number, and email, confirming that you have been in the chat and in this class the entirety of the time, because that is the only way that we can track to make sure that you've been in the class the entirety of the time. Okay, I have 55 of you. There was supposed to be 77 of you. So I'm going to go ahead and get started on this and go ahead and start working through all of this for you. Okay, I see you are putting no camera, no worries. But if you're putting that you have no camera, make sure that you have logged in. If you're getting credit, please go through the chat and find your name information. It should have your name, your license, and your email all in one entry. All right. Looks like most of you have signed in. Okay, I am going to just sort of set the chat over to the side. I'll get alerted if you guys add anything in there. The one thing that I do ask is that you make sure that you are muted for us right now. If you're not on mute, please do. Nobody wants to hear you chomping on your Doritos or taking your phone calls or talking to your children if they're home. We get a lot of those things, believe it or not. Okay, the one thing I do ask is I am completely okay with you asking questions. Totally fine with you asking questions. In fact, I know that you're going to have a lot of questions for me on this class. This class is not designed to give any of you specific tax or legal advice for your situation. What we are giving you is broad generalizations of what you need to know coming into the real estate business, or if you've had issues with running your business sort of like a business, we're trying to give you the most consolidated information we can to assist you in thinking about the things that if you have a tax person that you need to be having those conversations with. And then if you have an attorney that you really like or that you use, or you have an attorney that represents you, to ask certain questions of them, especially when it comes to, do you need a corporation? Do you need to have an LLC or a corporation of some form for protection for you and your family, or for tax benefit purposes, or what have you? So we're trying to get you to really start thinking about your business being separated from your personal life. Okay. So I wanted to start by saying that. And I'm just going to give you a brief introduction of myself. I have been doing real estate law now. I am in my 21st year of doing this. Yes, I started when I was 12. Just going to leave it there, and we're going to go from there, right? So I've been doing this a really, really, really long time. And the one thing that I think that you guys as an industry don't do well is separating your personal from your business life. I don't know why there is an expectation that you work 24/7, because you don't need to, and you shouldn't. You really shouldn't. And I think COVID has taught us a lot about getting back to the roots of who we want to be and what we want to be and what we want to be doing. So I'm Amee Davis. I have been doing this again 21 years. I have my husband and I have been married. No, I've been doing this 22 years. My husband and I have been married almost 20 years. So we've been together quite a long time. We have 2 kids. One just started high school and one is now in middle school. So I no longer have children in elementary age school, which has really been tough for me to accept. I even tried to walk my high schooler into school the other day, and she was absolutely not having any of that. So no, I did not walk her in, but there was a moment of letting her go that I was like, oh, I really hate this. So we are dealing with that. My girls are extremely active in sports, grew up playing sports, huge Bulldog fan, so go Dogs. So if you're not a dog fan, I'm sorry that you take a lesser role in who you like. I'm just teasing, but I'm very passionate about my college football. For those of you that are from up north who don't get college football, it truly is a religion for those of us who like football in the South. And it's all in fun and love, I'm certain. So except for the Georgia Tech fans, they really, really hate us Georgia fans. They're the only ones that really, I think, truly deep down hate us. And that's about it. So I like all things adventure. My family and I are all about going to places where we have no cell phone coverage. We like getting out and about. We fish and we hunt and we play and we hike and do all sorts of fun things. We like to snorkel, and we are in the process of teaching my oldest how to scuba dive. So that's a little bit about us and our family. Business wise, we have, I have a small boutique law firm here in West Cobb, towards sort of the West Cobb Paulding area near Target. If y'all know where Dallas Highway and Target is, that's where I'm at. And I opened this firm right after having my first daughter. So for the first 6 months, she came to work with me. For those of you that have been with me a long time, y'all remember when I used to bring my oldest in to work with me because I was extremely afraid of letting somebody else care for her while I was at work. And then finally found the right fit for our family. And she is still picking our children up after school for us today. So we made the move really to open my own business. It really was a desire to be able to be a more active mom and a more available mom versus the hours that I was doing. Now, the misnomer was I went into self-employment and thought I was going to have better hours. I actually have more hours than I did, but that's all part of being self-employed, as you guys all know, right? So the reason I designed this class, my husband and I put this class together. For those of you that know my husband, many of you know our family and know our family very well because we see and live and are in West Cobb all the time. My husband is a CPA. And he and I got talking one night and realized that there was an extreme deficiency in giving realtors and agents information to help them run their business. And he sees it in his tax planning world, and he does a lot of business with realtors. And he's like, I just wish there was a way because it's a unique sort of spectrum for you guys to kind of know what to prepare for each year. And for me, it was, I get all these questions and I'm like, I'm not a CPA. I know a great deal by osmosis. And so that's what I tell everybody because I'm married to a CPA. I know a bit, but Derek has helped me put a bunch of this together, and he's going to try to pop in and talk to you for a few minutes at some point during this class if he can. He had an emergency issue with an audit that he did yesterday, so it pulled him away, or he would have been on here with me the whole time. So I'm going to go ahead and get you guys started. And if you have questions, if you will put them down in the chat, you can private message them if you don't want anybody knowing that you're asking a question, and then I'll only see it. The one thing I do want to tell you is, if you are messaging each other back and forth, I still get the message. So just so that y'all know, if you're ever in a Zoom and you're like, oh, this class is so boring, I still see it. So I apologize in advance that you have to listen to me for 3 hours. I will try to make it as interesting as I can. And towards the middle or end, I'm going to give you a spreadsheet. And yes, I'm always willing to take on more clients and more business. We always do. It's an ever evolving thing to grow business. So absolutely. So I'm going to go and get started on the PowerPoint. I am not a PowerPoint person. So let me just say this. I am not a technology person, but we felt like this class, it was really important for you guys to be able to see the information instead of us just kind of talking about it. Because when you start talking about taxes, I think all of us kind of glaze over naturally. So I'm going to give you some examples of some things that maybe will help kind of put it into perspective for you. And look, whoever your tax advisor is, there will be something in here that we're going to talk about that you're going to need to ask them about, just to see if it's a process for you and the way you're running your business, or if you need to think about that. I can't do a lot of specifics with you because I don't know all of your tax basis and all of your tax information, but I hope that it at least sparks some good information for you to have conversations with whoever your tax advisor is and whoever your attorney is. So let's go ahead and start sharing the screen. Let me see which one of these I need. Let's see here. Okay. So this is the one I need. Sorry, I have two versions of the same thing open right now, and I am just trying to close it out so I make sure that I open the right one. One had a discrepancy on it that we noticed, and we wanted to make sure we had the right one. Okay, here we go. All right, can everybody see this screen? Okay, good. All right, and again, feel free to ask questions if you have them so that I can answer them in the bottom. So let me go ahead and just start right here. This is the brief overview of some of the stuff that we're going to go over. We're going to go over, the basics of business education and fundamentals. We're going to go over some discussions about having an assistant helping you take care of all of your expenses and helping you manage the business side of things. If you have that, if you're big enough that you have that, we're going to go over some of the bookkeeping and record tips, tax planning, payroll and staffing, and expenditures, audits, and knowing your net worth and what you are spending. That is the biggest thing I think realtors don't know, is how much am I actually worth and how much is my business actually worth. We're going to go over major liability issues and then common business issues and resolutions. So I have it all in here, and I'm kind of giving you just a brief overview. If you want to take notes, now is the time for you to get like a pen and paper. You might want to take some notes. We've taught this class. This is my 4th time teaching this. Usually it's Derek and I teaching it together. And normally everybody sort of just takes a bunch of notes because sparking things that are interesting to you. So first and foremost, do you need a corporation from a tax perspective? The short answer is yes. Okay. That is the short answer and the immediate answer, depending on how much business you actually do. But the following entities will avoid double tax. Sole proprietorships don't get double taxed. LLPs, which are limited liability partnerships, and then LLCs, which are limited liability companies. And then you have partnerships and S corporations. You can actually have an LLC that is filed as an S corporation. Okay. But you have to elect that pretty close into actually setting up the LLC. When you go to do your tax ID and obtain your tax ID number, you have to do it about the same time so that it doesn't trigger an audit or trigger additional information having to be provided. But you do the election at the time that you get your EIN for your business. They're easy to set. Sole proprietorships are easy to set up. They're not as tax efficient and potentially more often will be able to go after you for personal liability issues. Okay. The net profit is reported on a Schedule C of the taxpayer's 1040. So you just have a sole proprietorship. It's almost sort of like doing just a DBA where you're getting money into, for example, ABC Painting, which is your painting, DBA ABC Painting. The net profit is reported on the Schedule C. So it's just a Schedule C that's added to your 1040. It's not a separate tax return. The owner is subject to 15.3% tax on net earnings from self-employment income. And business losses can offset other personal income such as wages, capital gains, or interest. Okay. I know some of you are taking a picture of this. You can actually save the screen as well. So feel free to do that. That is totally fine. I want to give you this really quick disclaimer. Information is intended as a general discussion of subjects addressed and is not intended for formal tax or legal opinion. Do not use this or rely on this as information specific to your own situation. And you need to make sure that you're contacting your professionals that you work with. So we're going to move on to partnership, and you're going to see a couple of disclaimers in the middle of a couple of things in here, just because we put them in here just to keep reminding you throughout the process. Okay. Do you need a tax? We're still on the, do you need a corporation from a tax perspective? Let me talk to you about partnerships. Most realtors do not do sole proprietorships. Most of them either do a partnership if they're going into business with someone, or an LLC. Those are the two most common ones that I see you all prepare and do. Setting up a business is not just going to the Secretary of State's office, registering a name and saying, I now have a business. Okay, that is not what it is. And we're going to talk about the processes and steps in a moment. So if you have a LLC and you don't have an operating agreement of some form, I would encourage you to get one. Okay. So let's talk about partnership. Organization is having two or more owners that function as a trade or business. That is the definition under Georgia code. Okay. A partnership, income and expenses flow through the partners and is taxed to the partners, whether or not it is distributed. So let's say that you have a partnership that you have $50,000 in. Each one of you as partners are going to be taxed on that money, even if you haven't received the benefit of that money yet. Okay. So it flows through to your personal income tax return is what the partnership does. So it just is going to flow right through there. And it's going to be a Schedule E on the taxpayer's 1040. So you're going to get a separate schedule, just like a Schedule C for sole proprietorship. You're going to get a separate schedule, and that schedule is going to set out how much you earned on the partnership that you are a part of. The net profit is reported on a 1065, which is a separate filing, but again, it flows through the Schedule E of the taxpayer's 1040. So this partnership will get its own tax return, but then you get it attached to your Schedule E. General partner's share of the business income, not rental, is subject to 15.3% of the tax on net earnings from self-employment income. And business losses can offset other personal income subject to partner's basis and by at-risk passive activity, as well as excessive business loss rules. So there are rules in place with the IRS regarding excessive business loss rules when it comes to different formations of different businesses, in how much loss you can write off and how that loss has to be shown and what constitutes a loss. So it can be changed at will. Now, I know a lot of people don't like that you can't write off, for example, you can't write off entertainment anymore. So if somebody gives you tickets to the Braves game, they can't write that off. That's just a gift to you, right? Gifts are limited, and we're going to talk about that in a moment, about the price that they're limited to. However, you can't write those things off as entertainment any longer. But most people, the vast majority of people, received a benefit of getting a higher tax write-off on their tax returns. So it's a $25,000 amount that you get to write off on your personal tax returns. So, which was higher than, and most people can't itemize up to $25,000 in write-offs. So that's part of the issue that we're seeing. And that's one of the biggest things that Derek tells everyone all the time is there are a lot of things you might not be able to write off just based on excessive business loss rules or something, of those nature. So if you have, and you're just starting out in real estate or have just recently started out in real estate, first of all, let me say this. If you just started out in real estate in 20 or 19, 20 or 21, that is not normal. Okay. The market you've been in is not normal. You don't need to call me asking me if you need to get out of the real estate market and was this a bad decision. The market we're in right now is tracking very closely to the 2018 market. So it is really, truly a more normal market. Those, I see y'all shaking your heads. Those of you that have been in this market a minute are like, yep, it really is. It's, and those of us that have been in the market a little bit are like, hey, we can breathe right now. Like we feel like we can actually breathe in this market right now. In 2020, I think I had 5 days total off the whole year. Because inevitably every time I tried to get out of the office, somebody got COVID. So I had to be in the office, or had scheduled a vacation or whatever. And then last year, I think it was a total of 7 days out of the office for the whole year, just because we were so incredibly busy. And with COVID still kind of being an issue, we were working through that. This year, I was able to actually take a vacation, which was nice. So I know how hard you all have worked, and I know how hard the last 2 years have been. But for those of you that are new who think you got into the market and were like, oh my gosh, this is such easy money. Now it's time to work, because 2018 sort of marketplace is back, and we're going to show you some of those things too, and how to really sort of plan your business and how to think about it. So this is sort of on the partnership side. Now let's talk about an S corporation. Corporation that is elected to be taxed as an S corporation. An S corporation income and expenses flow through the shareholders pro rata. So depending on what your prorated share of the ownership is, let's say you're a minor owner, let's say you're a 30% owner. So you're going to be taxed at the 30% rate, and it's taxed to the shareholder again, whether it's distributed or not. So the money can be sitting in the business account and you not received it, but you're still going to be taxed on it. Okay. It's very similar to the people who we have when we give them a check at closing and they don't want to cash that check for a long time because they don't want to be taxed till the next tax year. It doesn't matter if you haven't deposited that check. What matters is you've received it. And it's based on the year in which the income was earned, not when you actually receive it. So holding off on distributing it to yourself often is not the right thing, because it's not going to help you anyway on your taxes. Okay. The net profit is reported on the 1120s. It's a separate filing and flows through the Schedule E of the taxpayer's 1040. And I know a lot of this is very precise, but we wanted you to know what to expect on your tax returns. So you're going to have, in some cases, a whole separate tax return, and then you get a schedule that goes along with your personal tax returns. In some cases, you're not going to get a separate tax return. It's just literally itemized on a separate schedule of your personal tax return, but not a separate tax filing per se for a new corporation, if that makes sense. Employee shareholders receive wages for services rendered. The wages must be reasonable. So if you have employee shareholders where you're receiving wages, for example, you're paying yourself as an employee, the wages must be reasonable. I will tell you what we are often hearing from IRS is that where it really kind of the threshold is about 50% of your income. If you're paying yourself as an employee of your corporation, it usually ends up being about 50% of your income is what they're looking at. Because they really want that Medicare, and they really want that the FICA monies and the Social Security monies. Okay, because remember, they're using your money to pay for the people that need Social Security right now. The wages must be reasonable. Additional profits are passed through to the shareholder and are not subject to the 15.3% tax on net earnings from self-employment income. That is one of the biggest difference. There can be a little bit more tax savings on S corporations, but for every type of corporation you do, remember, you're going to have additional expenses in filing your tax returns, because your CPAs and accountants are going to charge you more money because they're doing additional tax returns. Okay. So you need to think about, okay, my personal tax return runs me whatever it runs you. My corporation tax return is probably going to be somewhere in the same ballpark or twice. So somewhere in that avenue to run your new tax return. So that might be something that costs you. So if you're a 3 to 4 year closing a deal a year person, it might not benefit you to open the corporation. If you are, and you're going to have to talk to your accountant or tax person for this, if you are a 25, closing a year person, this may well benefit you. Okay. Business losses can offset other personal income subject to the partner's basis by at-risk, passive activity, and excess business loss rules. Okay. Does anyone have a question so far on these three really fast? Just on your understanding, there's a separate tax return for some of them. Sole proprietorship doesn't have a separate tax return. It's just a schedule on your taxes. The rest of them get a separate reporting, a separate filing so far. Okay. LLCs. LLC is a limited liability entity formed under state law. It can be treated as a disregarded entity, partnership, or corporation for federal income tax, depending on the number of owners in certain elections. So they can set up an LLC, and a lot of people that have rental properties do this. And they'll set up an LLC and they'll have a disregarded entity, whereas they'll set up multiple LLCs for all the different properties they own, but they'll have one master LLC that is managing and overseeing everything to do with that LLC. So they have basically a management agreement. Let's say they have 1, 2, 3 LLC, 4, 5, 6 LLC, and 7, 8, 9 LLC. But then they have ABC Acme Corporation, which is the master corporation. The lower ones in these kind of situations are often disregarded entities. And all of the taxation flows through the master LLC because it is the manager. And so instead of your name being on 1, 2, 3, 4, 5, and 6, and 7, 8, 9, it will say ABC Acme Corporation is the manager of those. And then you have to look at ABC Acme Corporation to find out who the owner of that is. So a lot of times you'll have a disregarded entity when people pile up their ownerships. But they are taxed as a sole proprietorship, or can be taxed as sole proprietorship, partnership, corporation, or S corporation. A lot of people really like the LLCs because their accountants can assist them in deciding which tax election to make. And it's unique because it's not just taxed as an S corp or a corporation or a partnership. You get to make an election with an LLC, but still have the limited liability that you're looking for. Okay. All right. Some bookkeeping and record keeping tips. Now, I'm going to go on and tell you, every time I've taught this class, I've stepped on toes. I'm not going to apologize for doing it. Okay. I grew up in a church where our preacher used to tell us, if I'm stepping on toes, just remember, I'm not saying it. You just don't like what I'm saying. Okay. So if you're feeling offended by it, just know that it's probably because you need to look at the way that you're handling your business in its entirety. My husband and most CPAs will not handle all of your personal bookkeeping. And if they do handle bookkeeping for clients, they require that those clients, before they send them the stuff they enter for monthly bookkeeping or quarterly bookkeeping, they require that they review all of the bank statements and sign them. And they require that the bank statements have copies of checks that were printed and cleared. So you can get those via email, from your bank, or go on your statements to find those, and that those are signed off on, like they've reviewed them and they initial the bottom of the pages, and that they sign off or initial all pages of all credit card statements that they also have to enter for itemization. And the reason that is because they are not there to look to see if an employee is stealing from you. So if you have someone that is handling your bookkeeping in your office, let's say that you have an assistant and you just give them your stuff and they go in your business QuickBooks and enter it all for you. As an accountant, they have no way of knowing if that check was forged or not. You're just giving them the stuff. They don't want the liability of someone coming to them and saying, well, you didn't catch this. Well, I have no way of knowing what they wrote a check for, and you gave me the statements. So often, and this was the best thing, that when I opened my business, I thought, because I was married to a CPA, this is what I thought. I thought because I was married to a CPA, oh, I don't have to mess with my checks. I don't have to mess with all the bookkeeping. My husband's going to do it for me, right? My husband's like, nope, you got to learn to run your business. And so I knew the management part of it and I understood all of that. I just don't naturally like bookkeeping. Okay. He will tell you, and he will openly tell you, that I am his best and his worst client. I'm his worst client because I don't pay on time. I don't pay him at all. I'm not paying him for services. And I'm his best client because he knows that when I put something in, that I know how to use QuickBooks because I'm so independent by nature that when he told me he wasn't going to do it, I was like, fine, I'll take care of it. Don't worry about it. And I enter it with such great notes that if he's not sure what I've used the money for, he can go in my notes in QuickBooks and look at it. And so I would encourage you to become your best possible record keeper yourself, and to every single month look at your bank statements and itemize those out. If you don't have a QuickBooks, an Excel sheet, something, and even in QuickBooks, I'd recommend that you still keep an Excel spreadsheet. I can tell you every single year that I have been open, what month I've had the vast majority of my expenses in, because I can look at it and I know, and I keep up with that. It only takes me about 30 minutes to an hour a month to really do this and really watch it and really keep up with it. But I even randomly, just for audit purposes, because I'm so protective of my IULTA account, which has all of our client funds in it, that I will randomly go through and pull Davis and Associates checks that I've deposited myself to make sure they've cleared properly. Just because I need to be able to say to the title insurance companies, I check those statements every month. Okay. And you guys need to be doing that, because the number one way to lose money is not watching your business bank account and not watching your checks that are going in and out. And sometimes we all get so busy that you're writing so many checks for marketing and so many checks for this or so many checks for that, that maybe something has slipped by you. I had a realtor who had someone that was assisting her with her bookkeeping, and she didn't notice for almost a year that there were checks going to, there were 2 checks going to an American Express card. She got to looking into it. One was going to hers, one wasn't. And because she wasn't watching it every single month and looking at it and checking it, she didn't realize that her assistant was using her credit card to pay for her money, to pay for her own credit card at times, and was not giving her receipts for things that she claimed that she bought. I am an absolute advocate that I don't care if you have a corporation or not, you need to have a separate business account. So if you don't have a separate account that you just put all of your income in and all of your expenses go out in, you are really going to have a problem if you get audited. Okay. I want you to keep your business and your personal stuff separate. If you don't have a credit card that you use separately for your business, it doesn't have to be in a business name, but it does need to be separate. And I will tell you, I was just comparing business credit cards the other day, and I'm going to throw this out there. I'm not advocating you go with one bank over the other. I'm just telling you they have a really great business bank card option right now is Ameris Bank. They have a great business credit card option right now that requires very little to get approved for, if that makes sense. So if it's a new business, they're really good about bringing in a new business. Amex has some, but they have annual fees. That's the only thing with Amex. You have to offset those by your business fees. Check with your local bank, whoever you're banking with, about a business card. If nothing else, take one credit card that you have and make that for only your business expenses only. And when you pay that every month, let's say it's an American Express, you need to go into your QuickBooks or whatever record keeping system you're using, and you need to itemize in that system, this was for marketing, this was for client gifts, this, and you need to itemize. So you go into your credit card payment, and at the bottom of it, it will give you all these rows, and you just go in postage and florist, and you itemize each one of those expenses on the payment where you make that credit card. Okay. So in QuickBooks, if you're using QuickBooks, it's super easy. And they have an online system. They even have an app now that you can scan your receipt and save your receipt into that payment. And I love that because it's kept, my record keeping and my paperwork down a little better to a little bit more of a minimum. So I just upload all of my receipts in there, and then I don't have to worry about the materials coming off of, and the ink coming off of my receipt later on. Like if I go back to look at something 2 years later, a lot of times the ink is off. This allows me just to scan it in and keep it. So please make sure you have a separate bank account, a separate bank card. These are all really Easy things to remember, but a lot of you as realtors, we find don't do this, that you just, especially those of you that don't do a lot of business or are sort of doing this more as a secondary job. You tend to just put this right in your personal account. For auditing and record keeping and the IRS issues and the triggering of IRS. I don't know if y'all saw, but after this whole, and I'm not getting into politics, not doing it. This whole Mar-a-Lago issue, it's been announced that the IRS has taken on how many new agents? And their sole thing is to audit corporations, including sole member LLCs. They want to make sure that you're doing your tax stuff right and that they're getting every dime they can. So please be aware of that. Only personal transactions should be distributions to the owner. So if you're taking a distribution or a partnership distribution, that's a personal payment to you. Okay. Income reimbursements are not distributions to the owner. Those are reimbursements. You do it as a check to yourself, and then you itemize out what it was reimbursing. So you make a note in your system. You would do it, for example, if it's office supplies, you do it as office supplies, and then you just make a note in there, reimbursement. You know, we all have an issue every once in a blue moon where I realized that I had given one of my staff my business card and I needed to go by and pick up something and I have to put it on my personal and reimburse myself. I have kept that. I maybe have to do that once or twice a year. So please don't get in the habit of doing that. It's not good for record keeping. And if you don't know how to reconcile a bank statement, and I'm just going to say this, and please don't get mad at me. A lot of our younger people don't know how to reconcile bank statements because you haven't had to, right? It's not something you often have to do because a lot of you have a different system of doing it and you've been taught to keep up with your bank statement a different way. You need to know how to reconcile a bank statement. Okay, you need to know what's out, what's in, how to reconcile it to make sure the bank has it right. With the big merger of some of the banks lately, we've been hearing a lot about how people's money has just been disappearing from their bank accounts and stuff. If you don't know how to reconcile your bank statement, you don't know where the money's going or where it went. So you need to reconcile your personal, but you really need to be reconciling your business, especially if you're trying to take write-offs. Okay. And you need to be itemizing which each category goes into. If it's postage, it needs to go into postage. If it's florist, it needs to go into florist. All of these, and this is the one thing I do really like about like a QuickBooks style program, whether you use QuickBooks or another one. The one thing I really do like about those types of programs is they already have a lot of this tax categories in there for you. So you don't have to recreate them. You don't have to recreate what things are. And I have one client, he doesn't like QuickBooks. He doesn't like any of that. He does everything on an Excel spreadsheet and that's all great. You just have to make sure you're itemizing everything right. And for me, the Excel gets a little more complicated. It's your money, peruse it or lose it. Okay. If you are not muted, I have asked everybody to mute themselves, but I hear somebody in the background. If you would just check and make sure you're muted, please, if you don't mind. I'm a big advocate of perusing every dime you have, every single month, at least once a month. Now, if you're like me, who is married to a CPA, or you have a CPA or an accounting degree, you probably look at your accounts way more than the average person, right? I will tell you, for me personally, I look at our IELTS account. It's one of the first things I do every single morning, and I do it before I go to bed at night. Because although we have all the protections that we possibly can have, we have a system on ours where we have to upload the checks twice a day. And if they're not uploaded properly, they won't clear. And so we have been able to keep fraud out of our accounts because of having that. It's called a positive pay system. There's all sorts of really cool things that you can do, but if you're not looking at your money, you're going to lose it. And guess what? Most banks only go back up to 30 days for protection. Most banks only protect you for fraud on your account up to 30 days. So if you have a credit card that you didn't look at, if you don't look at the fine print, most of those are 30 days. So if you get a charge and you realize 4 months down the road, wait a minute, this was charged on my account, this was fraud, you only had 30 days to go back and deal with it. So if you're not looking at your credit card statement, you're losing money. Okay. And by the way, do y'all want to know this? This is probably a really interesting fact. What denomination of money is the most often amount for fraud? You might want to guess. You can unmute yourself. It's fine. Take a guess.
$20 bills.
Okay. Who, oh, I see a couple of you are saying 20. Anybody have anything else? Any other denomination they think is the right number?
100.
100? 90% of all credit card fraud is less than $100. 90% of credit card fraud is less than $100. And most often it is denominations of that 90%. When you look at it, it's denominations under $40 because most people don't look at under $40 denomination charges. So if you're not looking at it, you're losing it. I realized that I had a charge on one of my credit cards. This was about a year and a half ago for $3.60. And I couldn't figure it out. Immediately called the credit card company and they said, yeah, this is a fraud issue. We've had a lot of people hit by this, and they will do it every month for denominations under $5 or $10. And then they'll go up to $20 because people aren't looking at it. And they take millions of dollars a year doing it that way. So, and they often say that most of the time it's the under $40 that people don't catch, but the under $100 is about 90% of the credit card fraud that the banks see. Always, always, always for your business banking account, even if it's not in a corporation, make sure that you're getting the microfiche copies or the canceled check copies that the bank will provide you. Yes, it's $2 or $3 a month for you to get those copies, but you need to look at them because they give you the front and the back of the check. And you need to make sure that, hey, yeah, these are my signatures, or make sure, because I've also had this happen in the, since 2008, when I opened my business, my personal business here. I've actually had situations where I sent an insurance check, and it actually happened with State Farm when some of you remember there was a big thing on the news a number of years ago where State Farm had 1099 employees helping with the payment processing in their payment processing thing. We were sending in checks and they were taking the checks and depositing them into a different account. So people weren't getting their insurance. And we saw it happen, and they were particularly doing it with law firm IOLTA checks. And I just go through every month and look at the back of checks, and I noticed that it didn't say State Farm on it. So I called State Farm to make sure the policy was paid, and it wasn't. And that's how I caught it immediately, that the check that I had given to State Farm was not cleared through State Farm, and my client's insurance wasn't paid. So the bank put the money back in the account, and we rewrote the check back to State Farm and were able to do it. But it was only because I watched my accounts that we were able to catch it in the first 30 days. Okay. We've actually had a family member endorse a check for another family member and take their money and get called on that. So if you don't have those microfiche or cancel copy checks, you really need to look not just at the front of them to make sure you wrote the check, but more importantly, the back of them to make sure who you wrote the check to cleared, because you will see things where a company may call you, especially as you get busier, and say, hey, I never got your payment for setting out your sign, or I never got your payment. And you're like, no, that cleared. And then you look at the back of it and it may not have cleared by the right person. Somebody might have, absconded with the check. So please look at the front and the back of your checks. I know this seems so archaic to some of you, like, why am I looking at checks? But it's just the same as if you're looking at your, checks are still really important in business. So you still need checks for business, but it's just the same as if you're looking at your credit card statements. Okay. Please go through and look at them. And I know you are sitting there thinking, well, I look at my check every month. Do you really? Do you really look at your bank accounts every month? Do you really look at your credit card statements every month? Are you just looking, oh yeah, it was about $5,000 that I charged this month. It was about $2,000 that I charged this month. That's about right. Do you actually know that you're not having fraud on your accounts? I mean, it's important for you to look at. Okay. I find that most people don't know for sure. Most people are like, yeah, it's about that. I'm just going to go in and pay it. Okay, let's look at the next thing. I'm trying to watch my time too. I'm sorry. Okay, home office. Let's talk about your home office. The area must be used regularly and exclusively. Okay, and we've made this big and bold. If it is not exclusively your home office and it's just an office in your house that everybody uses, it is not your home office. Okay. It has to be an exclusive location, if that makes sense. Principal place of business, place to meet clients in normal course of business. It can be, you can deal with direct expenses or indirect expenses. When you're talking direct expenses, you're talking, you can write off your desk for your home office potentially as an office furniture piece. Okay. But again, the exclusivity is a big issue. And this is one of the things that my husband will tell you is that in some of the audits he's had to deal with. So what happens a lot of times is I know that we're all about watching our business expenses, but sometimes cutting corners in paying someone to do a not great job doesn't benefit you in the long run. And you guys talk about this all the time, right? You talk about this in your business all the time. Yeah, there are a lot of cutthroat realtors out there who will do your listing for 2%. But what are you getting for that 2%? Oh, you're getting a HOPA contract that you have to fill out yourself. Great. Let me tell you what I do for 3% or 4%. And this is why you pay me more, because I handle all these other things, right? And so it's similar thing. So what we often see is realtors especially will deal with an accountant person who maybe isn't a licensed CPA, and they'll deal with the accountant person in this way, doing the bookkeeping, which they're not really kind of overseeing, or doing their tax returns. Now, there's a couple of things you need to know about that. You have to be registered with the IRS as someone to represent someone, or a licensed CPA or a licensed tax attorney to represent someone in a tax audit. Did y'all know that? So if you have an accountant who is not licensed and not set up with the IRS as a client advocate, basically is what they would be, they cannot represent you if you get audited. So let me explain what happens. You then have to go to a CPA who can represent you, or an attorney, and you're going to pay 4 or 5 times the value of that tax return, getting them to go back and audit that tax return to check it. And then you have to pay them to represent you in the audit, which can be thousands of dollars. Okay. And so I often have clients that will call me and say, I have an IRS letter. Can your husband help me? I'm like, I don't know, call my husband, because that's not my area of expertise. And they get upset when they find out that he now has to charge you to go back and relook at all these 3 or 4 or 5 years of tax returns that they're going back to look at. And then on top of that, charge you for his time to handle the audit for you. Okay. I don't care who you're using. Just make sure that they can actually represent you. Just make sure that they can represent you in the event you get audited, and get that in writing from them, so that it doesn't cost you to have to go back and pay somebody else more money to re-verify everything. Okay. So that's a really just important piece that a lot of people don't realize or don't know. Okay. Can turn non-deductible commuting into deductible business expenses. So this, if you're not keeping up with your mileage, you should be, as much as you guys are out there. Make sure that you're doing that. And there is a simplified deduction. It's $5 up to 300 square feet. That's the simplified deduction for home office. Guys, I will tell you, I've asked multiple CPAs, not just my husband, about this. You cannot write off your parking in your driveway as a home office expense parking. There are all sorts of things that we see that I'll have people say, well, I write off my parking. I write off the square footage of where I park my car because it's in my business name. Okay, when you get audited, let me know how that works out. Okay. There are just certain things. There are things that are going to trigger audits, and over expending your home office is a huge audit issue. It is one of the top audit issues, especially for realtors. Okay. And let me say this, none of us like paying taxes. None of us like the IRS. They are not our friends. Nobody likes the IRS, right? If you like the IRS, raise your hand, because we all want to glare at you for 5 seconds, because I don't know that anybody likes the IRS. Okay, autos. They have to be listed as property, as business property. You must allocate between your personal and business use. You can either use the standard mileage or actual mileage. Standard mileage goes from 58.5 cents to 62.5 cents per mile in July. So although our expense for gas is greatly increased, we are getting a little bit of benefit if you have to write off your mileage. Calendars or apps are great places to keep mileage records. Somebody told me that there's one that you plug into your car. It sits on your dashboard, and every time you stop, it tracks the mileage, and it says personal or business. And if it's business, it lets you put the client name in or something. And it's a little thing that they put on their dash. I know there are a ton of mileage apps that are great. There are a lot of calendar apps that are great for mileage keeping. I don't care how you do it. Just please make sure you're actually keeping up with it on a daily and weekly basis. they're not going to let you take your average over 2 years and just say, oh, that's going to be my average going forward. Because if your business increases or decreases, you can't just really say, oh, it's more or it's less. You got to know what it is. So please make sure if you're deducting your auto expenses that you are itemizing those. If you're deducting your gas, then your mileage. The whole reason that you're getting that back is for the expense of the gas. So you're not going to be able to deduct mileage and then expense for gas too. Just so you're well. Meals and entertainment. So let's talk about this. Meals and entertainment must be ordinary and necessary, not lavish. Taxpayer, employee must be present, provided to taxpayer or business associate. So if I give you and pay for your dinner, in order for me to write it off, I have to be present. So if you want me to take you to dinner, I'm happy to do so, but you got to have dinner with me. That's the way it works. Now, some of you enjoy my comedy and enjoy my sarcasm and might really find it funny. Some of you are like, okay, her ADHD is too much to handle sometimes. And that's okay too. So normally only 50% deductible because I'm with you. I can't deduct what I'm eating. I can only deduct what I'm paying for you. And then for 21 and 22, 100% deductible from a restaurant because they were trying to help the restaurants out because of all the issue going on with COVID and trying to, help the restaurants get reestablished and earn income because they had a really long time where they were in the red. Entertainment is not deductible as 2018. Don't call me for tickets to Red Hot Chili Peppers because I can't write that off. Okay. And I love y'all, but I really want to be able to write off the things I give y'all because it is a business expense for me. But I'm also a rule follower to a fault. And those of you that know that, I'm a rule follower to a fault. So there you have it. That's just the really easy nitty gritty on meals and entertainment. Now, it can't be lavish. So it has to be like ordinary, necessary, and, sort of in the course of your business. Like I'm meeting you for lunch today because we're talking about something you have on an issue with the listing. I'm doing a client appreciation luncheon where I'm paying for all of your lunches or something like that. It can't be some hugely lavish. I'm sending you on you're going to use my lake house. I don't have a lake house. Don't call me about a lake house. I don't have one. That's why I'm using it as an example. Yeah, I'm gonna let you use my lake house for a weekend. And then I'm gonna deduct that weekend expense off as expense. Well, I can't send you to my lake house for a weekend and write that off under these codes. Okay. I know it happens, just telling you. I don't want to hear, well, so-and-so sent me to their lake house. I don't care. I'm just telling you that, it can't be a deductible expense. It's only deductible if the trip is primary for business. So I have a lot of realtors who are getting licensed in Florida. Hi. And they're buying condos down in Florida and they're wanting to write it off all as business expense. Okay. So if you're going down on vacation for a week with your family and you're going to take one client to lunch over that period, and that's all you're doing is going one day, that's really not necessarily primarily for business expense, is it? It's not. Just the same as if I'm going on a business trip and I'm taking my family so that they can go enjoy the area while I'm doing things, right? I had a big conference last year and my husband and both my girls ended up going for the 4 days with us. Guess what I got to deduct? Only my expense for going. That was it. My part of the expense for going to that business expense. My kids' cost to be there and my husband's cost to be there and their tickets and everything else were not deductible. Okay. Handing out business cards at Disney is not a business expense. I'm sorry to tell you. That is not a business expense. Let's be honest here. Disney's exhausting. If you've ever been with your children and you have littles, I'm going to go on and tell you there is no tired like Disney tired. And I'll give you one little great piece of advice. If you're going for a week, make it like 5 days and come home and rest for a couple of days because you're going to need that time. So those are some of the things that are things that you need to be thinking about. There used to be this old adage, well, if I hand out while I'm on vacation a bunch of business cards, that's a business expense because I'm marketing, right? It has to be the primary source of your time on that trip has to be for business. So for me, when I went on my conference for my continuing ed last year and for some things that I did last year, and my family just happened to go for those 4 days, I was literally in continuing ed classes for 3.5 days. I saw my family for dinner, but my husband and my kids really enjoyed what they were doing, right? So you've got to be careful with what you're doing so that you're not triggering audits. And I'm really interested because I'm looking at some of your videos. Some of you are just getting some real work done. So just looking at what all y'all are doing, I see you. And I see some of you on the phone. I can tell you're talking business because of what you're doing. So awesome for you that you can multitask. Okay, let's go through the next one. Okay, gain and exclusion, sell of primary residence. Let me talk to you about this one for just a second. I want you to forget everything you've ever heard about the gain of a sell on a primary residence really quick. Okay, I want you to understand a couple of things. You used to have to take that money and put it right back into your next primary home, right? You no longer have to do that. So let me show y'all something. Watch this. Here's what the code says. All right. Taxpayers can exclude up to $250,000 of gain on the sale of their principal residence. It's per individual. Okay. So if they're married filing jointly, they get to exclude $500,000 on the gain. So let's say that they bought the house for $150,000. They're selling it for $750,000. Okay. After their expenses, right? They can write off up to $500,000 of it with no gain. Anything over the $500,000, they have to pay tax on. All right. So we just worked with one of my clients and my husband helped them, and they were selling their house. They had bought the house for about $600,000. And in last year's market, with it having land with it and everything else, they were able to sell it. Good for them for like 1.75 million. Okay. Good for them. I'm always happy when somebody succeeds and earns money. Good for you, because it's too hard to come by. I am never the person that's going to be like, oh, well, they just came into, I don't care how you came into it. Good for you. I just don't care. I am not a keep up with the Joneses, jealous kind of person. I'm happy for you if you're succeeding and that you're happy. That's all I care about. So we were able to kind of sit down with them, and Derek went over all the expenses that they had in selling the property and was able to show them before they actually took the contract what they were going to have to pay tax on, and based on their tax rate, what their expected tax expenditure would be. If you have clients that you believe are going to earn over $250,000, we actually had somebody that bought a house at the beginning of 19, sold it in, I think, November, December of this year. And it was an individual, not married, filing jointly. And his income that he earned on it was over $300,000 because he had done a bunch of work on the house. And all of that. So he was really concerned about the amount of money he was going to have to pay. And he was going to have to pay some, but he knew going into it what he was going to have to pay. So if you're looking at the sales prices on the last warranty deed and you're taking a listing and that sales price is greatly exceeding, the $250,000 or $500,000 mark, look out for your clients and say, hey, I'd really like for you to talk before we list this. Please talk with your tax advisor, because your home is worth so much more than what you can exclude on gain. And I just want you to be aware if you have to pay any tax on the sale. Okay. Because some people think that they pay no tax on any sale, no matter the value. Some people think that they have to pay a part, up to a certain dollar amount. And a lot of them have all these weird numbers. These are the right numbers for you. Generally, you have to have owned the property as your primary residence at least 2 of the last 5-year period ending on the date of sale. Okay. There are some exclusions to that 2-year rule. If you are moving because of qualifying for a job relocation over 50 miles, okay, that is one of the exclusions, that you didn't own it for at least 2 years. If there's a catastrophic health issue that you have to move, potentially, and I'm not saying this is exactly one of them, but potentially getting in an accident, becoming a paraplegic, and you no longer can get upstairs to your house and they're having to move you to a house that is a ranch, that could be an issue for not having to own it for 2 years. Or incredible unforeseen circumstances. loss of primary wage earner spouse. That might be a way to get out of the 2-year rule. The only way to know if they qualify for that is to get them with their tax advisor. You're not a tax advisor, right? So here's the thing. Your job is to be an advocate for your client, right? And you're to be a facilitator in the contract negotiations. But what is added value for you as a realtor is being able to know when direct your client to a professional, and you pointing out to them, because look, agents and realtors, just like attorneys, just like me, I'm including myself in this, are a dime a dozen, right? You guys can close at 15,000 different law offices. Many of you close with me because of the service we get and because you know you can get me on the phone, right? And so here is one of the things that I really want you to understand is that you don't have to know everything. I don't know everything, but I, by God, know where to direct my clients if it's not something I do. I have a list of like 40 attorneys all over the state of Georgia that I give information out for. Because I know they do a good job, have had phenomenal feedback, all the way to DUI attorneys down in Statesboro, people. So those are the things that I've gotten calls on. And I will find you a good referral if it's not in my area or not something I do. That is also an added benefit for you. So you talking about, hey, I have all these resources, but think about this. I go into a listing agent and I just say, hey, this is what your home's worth, and this is what we're going to do, and this is our marketing plan, blah, blah, blah. And then my competitor comes into the listing agreement and says, hey, I noticed that you only paid $500,000 for this house, but you're selling it for $1.28 million. Can we talk about your taxes for a moment? Have you spoken with your tax advisor to see if this benefits you financially in selling it? Because I'm not just your realtor, I'm also your advocate. So I want to make sure that if you're going to owe taxes, that you know the value of the taxes that you're going to owe on any overage of whatever your capital gain may be on this home. If you're married, filing jointly, because let's not assume people that live in the same house with the same last name are married. Please, let's not assume that. And let's not assume that they're not married either, because you never know. A lot of people keep their own names, right? So you've got to be aware and sort of in tune with that piece of it as well. But hey, if you and the other person on title are married and filing jointly, you get up to $500,000 of excluded gain. If there's going to be more than that, I really would like for you to talk to your tax advisor and make sure that this is financially right for you. If you don't have to sell or whatever, if you want to sell, I'm your girl, your guy, whatever, I'll get you sold. But I also want you to check on this piece of it too. Who do you think they're going to come to for listing that property? Now, you're not giving tax advice, right? You're advising them to seek what? Counsel on their taxes, right? I have had so many realtors, especially during the short sale boom, give out tax and legal advice and get really in trouble for some of it. Guys, a short sale was not always the right thing for most clients. In a lot of cases, a bankruptcy was a much better option for many of our clients than doing a short sale was, because they had all this credit card debt you didn't know about. They had all these other things. So one of the things that we were constantly telling our realtors back in the downturn of the market and the short sale boom was what? Please seek legal advice on whether or not a short sale is the right option for you. I have realtors that have then gone back and helped them get new homes. They ended up filing bankruptcy and ended up having to sell the bankruptcy through, sell the home through a trustee or whatever. And then when they were ready to buy again, came back to the person that advised them versus the person that they felt like was just there to make their money, right? And yes, it is a job. We do need to be paid. But you also have to take into consideration, you might not know all of the issues. So having those like generalized disclosures for your client are really helpful. You can have, and you can pull it right from the IRS. Hey, I'm giving you this in your folder. Check out your gain on your house. That way, you know if you have any taxes that are going to be owed. I just want you to have this information to make sure that you're checking on that. With home appreciation and in the values right now that we're seeing in the Atlanta market, it's really important that you check to make sure if you're going to have to pay taxes, that you know what you're going to have to pay when you sell this home. Okay. Do not give legal advice as to what is deductible and when they won't qualify or when they will qualify for not having owned a property for 2 years. Please don't give advice on that. Just tell them that, hey, I think this might be an exclusion that you need to check with your tax advisor on. I don't know your financial circumstances, but I want you to look. So if somebody comes to you, and we have a lot of people moving around the country right now, we're an incredibly transient country right now. So if somebody comes to you and say, hey, I'm relocating, I've only owned the house a year, have them check with their tax advisor to see if that is still going to be able to be an excluded circumstance. Okay. Vacation home and rentals. Okay. Personal use no more than greater of 14 days or 10% of the number of rented of days rented at fair value. That's how you determine if it's a rental or a vacation property. So if you are buying a property as a realtor in Florida because you're down there so much and you're licensed and you want to be able to write your condo off, personal use no more than the greater of 14 days or 10% of the number of days rented at fair value. So if you rent it for 260 days, how many days do you get to use it for personal? No more than what? 10%, right? Income and direct expenses, you have to itemize them on a Schedule E of your 1040 of your personal return. And other expenses prorated and personal portion is non-deductible. So if you use it, let's say 10% for personal use, 10% of all of your expenditures are not deductible. Utilities, cleaning fees, you don't get to use it for personal and then the cleaning fee be deductible, okay? So you're prorating whatever your expenditures are based on your personal use. Rental losses may be able to offset ordinary income above ordinary limits as a real estate professional. So there are some benefits if you're a real estate professional for rental losses. You might be able to offset that a little bit more. So check with your tax advisor if you have rental income, but don't go get your Florida real estate license so that you can buy a condo and write your condo off 100%. I already have a realtor who has done that, and she's already in the process of being audited because they're questioning whether it's actually vacation or personal expense. And by the way, I'm just going to say this to you. I wouldn't post all your vacations on Facebook. Nobody needs to know what you're doing on your personal time if you have business clients on there. But even then, I mean, you know, I'm a pretty private person. Those of you that know me, I'm extremely private in my private life. I am very tight with my family. My girls and I are all very, very close. You know, we are extremely close. I spend a lot of time, my husband and I do, with our children. But we don't put all of our vacations. That's just a personal choice for me. We don't put all of our vacations online. I don't post all my vacation stuff. I learned a lesson about that a couple of years ago because I realized that not everybody likes to see other people doing well. And not everybody knows what goes into you being able to plan that once in a lifetime vacation that you maybe went on. And I had somebody post "must be nice" one time when I posted something about my vacation. So now I've learned a little bit about technology, and I have where only certain people can see my private posts on my social media. But those of you that follow me on social media, I rarely ever post at all. My children don't like being out in the public arena very often, so I respect that and don't post a lot of their stuff. And those that know me really well are involved in mine and my children's lives. I have a lot of really close friends that my kids all call aunts and uncles, and they're not biologically aunts or uncles, but that's how my kids see them, and they know what's going on in my kid's life. I do know that as part of her audit, one of the questions that she got in one of her audits was, well, it looks like this is an awful lot of personal time at the beach. And they had seen some of her Facebook posts in their research. So just so you know, they are watching. So just be aware of that. Let's see here. Now, if you're down in Florida and you're advertising your business on your business page and you're saying, hey, look, I showed these 12 homes down here, go for it. Because I really, truly would love to see all of you break more than $1 million a year. I would love that for each and every one of you. But you got to know how to write it off and you got to know how to use it. Oh, that's a double. Is that the same thing? Yes, it is. Okay. Do you need a corporation? The short answer is yes. We recommend that you have a corporation for a myriad of reasons, including liability. Also for taxation purposes, it can be a huge benefit to you, and for payroll. It can also be an assistance to you to have a corporation for payroll expenses and things like that, and things that you can deduct under a corporation that you might not be able to deduct under personal expenses. So the short answer is yes. Now, again, this is dependent on how you're running your business, how much business you're doing, and what needs to happen for you. Okay. Check with your tax advisor on whether this is a good fit for you and something that you need to be doing. Okay. Now we're going to talk about some liability stuff. I'm going to do this one, and then I am going to, in about 11:30, give you guys a break for about 15 minutes. Maybe 11:45, give y'all somewhere in there, give y'all a break for about 15 minutes. And then we will come back after that break and finish up. But I want to talk to you about liability insurance options. Now, the other thing that I want you to run out and do after this class is talk to your insurance agent about your liability coverage. Okay. If you have a basement office where every now and then your clients come and drop things off to you, you may want to make sure that you have an umbrella policy for liability on your home, because if they trip and fall coming down your stairs, that could be a problem, especially if they're coming to a home office. Most insurance companies, homeowners insurance exclude coverage for business use. You have to have a separate policy for that in some cases. Do you allow customers to ride in your vehicle? If you allow customers to ride in your vehicle, your insurance should be considered a business insurance. You may need to get a different policy for your insurance. Now, many of my realtors have just said, and agents have said over the last few years, with safety being such a preeminent issue, that they will meet their client and they have to follow them, but they're not getting in their car. And I don't disagree with that. For safety purposes, I don't think you should ever be driving your clients around. Sorry, I don't. And I'm sorry if that offends you, or I'm sorry if you're mad about that. Do not drive your clients around. That is, if I can give you any advice today, that would be it. Meet them. Hey, follow me to the next house. Follow me to the third house. Here's the address we're going to. See you there. Wait for me in the driveway when we get there, or wait for me in front of the house. Don't go in, or don't go to the door, right? Because it's a liability for you if you get into an accident and you're driving your client and they get injured. Why take on the extra responsibility? Plus, commercial insurance for a vehicle is much more expensive than personal. I want you to be really careful with this and make sure, if you are going to insist on driving your clients around and doing all of that, I hope that you have the proper coverage on your car, just in case there's an accident. What if you have somebody who has a cane and they trip getting out of your car? What happens then? Look, anybody can sue for anything, whether there's a true liability or not. They can sue, right? And a lot of times they're suing just to get your insurance information, because they know most insurance companies will agree to just simply negotiate some form of a settlement to make it go away. Okay. Do you carry business insurance in addition to what your broker may offer you? Do you know what your broker's insurance covers? Do you have any idea? Let me stop right here. Does your broker's insurance cover for cyber fraud claims? Your email gets hacked and they send wire instructions that are wrong from your email. Does your broker's coverage insurance cover that? Do you know? With as prevalent as wire fraud schemes are right now, you should know that. I would request that you get I would recommend, and oh gosh, Dana and Dave are going to kill me and all of your brokers are going to kill me. I would recommend that you have a copy of your policy. You need to have a copy of it to know what's covered. Because if you're going to get additional coverages of insurance that you're going to pay for yourself, you may want to, and they may want to see what you already have as an errors and omissions coverage. They're going to want to see what you already have and maybe add a supplement to it for additional coverages. Okay. So I would strongly encourage you to have a copy of your actual claims coverage policy available to you, even if your broker's paying for it. But make sure that your broker is paying for coverages. If you do a lot of closings, sorry, I'm having an issue with the share for a second. Give me a second. I've got to reset it. Let me finish what I was saying about this. If you do a lot of listings, just by show of hands, how many of you do a lot of listings? Like a lot of your business's listings? Okay. You guys are the ones being targeted right now for wire fraud. Why? Because your emails are where? Out in the public. They're on your listings. Everybody knows how to reach you. It's easy to find if you're the person that has it. A lot of times they're on your internet. If you are using any form of an email account, you need to make sure that the email account is what's called a dual encryption or a three-way encryption process. They're harder to hack into. I'm going to go over a bunch of tricks for you that we implement in our office in our home in just a little bit. And I know you're like, oh my God, she's scaring me to pieces. And I'm so sorry if I scare you to pieces. I want you to be a little bit afraid of wire fraud. I do. We had a situation in our office a couple months ago, and it was a little eye-opening with how often you guys are failing to change your passwords. If you're not doing it every 30 days, you could be liable. If you're not changing your password every 30 days, you could be liable for a wire fraud that you had nothing to do with and somebody hacked into your email. And I'll talk about that in a little bit. For the liability for cybercrime, especially for those of you who are doing a lot of listings, there are already 2 court cases where federal courts ruled that the broker and the realtor were a percentage of liability for a wire fraud scheme that they didn't do anything to ask for, if you will. And I'll tell you why they were found responsible for some of that later. But again, anyone can sue for anything. So even if you did nothing wrong, they can sue you, and you still have to pay the attorney's fees to defend that expense. If you don't have cyber fraud coverage on your E&O insurance, you'll have to pay that out of pocket. Okay. They're targeting the listing realtors more often because your information is readily available. They're getting into your email, and then they're finding who you're communicating with. And so, for example, we had the one that happened a few months ago. We do not, and I know that y'all hate this, and I'm sorry. I'm just going to tell you, until we find a better way to handle this, this is where we're at right now. We do not give out wire instructions via email. We don't do it. We don't accept them via email either. And the reason that we don't is because the wire fraudsters have become so incredibly good at what they do. We have clients that have had wire fraud issues, and their wires were encrypted. The wire information was sent to them in an encrypted format. If you have Outlook, all you have to do is type encrypt in the subject line of your email first with nothing else on there, just encrypt, and then leave a couple of spaces and do whatever the information is, and it will encrypt your email to the recipient. It's super easy to do. And Gmail has a similar function, so does Yahoo. So they can encrypt it themselves, even though it is a fake fraud spyware email. Your client opens it, they're now tracking their emails. They now have all access to their emails. And it looks like it's a valid thing. It comes on the letterhead that has the law firm's names on it. The only thing is they're sending it with the wrong phone number. They're sending it to a phone number to somebody else that's answering the phone for them. Okay. They're then wiring the money out to the wrong place. So in the situation we had in our office, the lady had come in, got wire instructions to send us her earnest money. Okay. We told her we don't send it via email. She wasn't very happy with us, had to make, an effort to come get the wire instructions. We will mail them. We'll overnight them. We'll send them to the bank because they have the 221-bit encryption. We'll fax them to the bank. We'll fax them to your client. We'll fax them to a UPS store. We will not send them in an email format. Okay. With that being said, she got an encrypted email from a fake email account from her realtor. And as we're sitting in closing, the listing agent actually said to me, oh my gosh, this happened to one of my buyers on another closing a few weeks back. So I pulled her out of closing and I said, you need to change your password right away because you may be the connecting piece to the 2 frauds because they may have hacked into your email because she does a lot of listings. So just be aware that that's what's going on is they're hacking into the realtor emails, and then they're finding out who all the contacts are. And once you guys send that information out to the law firm, they're looking for the law firm. So on the form that she sent, form that the fraudsters had sent, she had emailed us a question. Well, our email is davislawga.com. They changed the V to a W and the L to a 1. Most people aren't going to check that. Anything about wire instructions, click on the email address and make sure that email address is actually a valid email piece to the law firm that you're dealing with before you forward it to your client. I'm going to tell you right now, don't forward it to your client, but I know some of you are going to be stubborn and you're going to do it anyway. Some of you Scorpios and Aries and whoever else, I don't know much about astrology. I just always hear they're very stubborn. Some of you others out there that are very stubborn, don't forward wire instructions. Email back the law firm and say, please send direct to the client. You have their email. Don't forward the buyer's email either. So don't respond to an email that you're not sure is really the law firm and say, hey, here's the client's email. Please forward to them, because now they have your client's email because you gave it to them, right? So what you want to do is send it back to them and say, please forward to the client's email. You already have their contact information. And then if they call you again or email you again, look at that first one, pick up the phone and call the law firm you're dealing with. Say, hey, I'm getting an email from so-and-so. Are you trying to reach my client? I want to make sure this is valid with all the fraud. We've had clients do that and found out that there was fraud going on. We can't control any of the fraud stuff. I can't control that they do, for example, an ADavis at DAWIS 1 AWGA, any at .com, any, and they can look, they can have a completely fake one that just says Amee Davis and it'd be a whole bunch of numbers, right? Anybody can create any email name they want. And yes, Sandy, we know that. I would agree to some degree that you're a little bit. I wouldn't say that you're necessarily stubborn though. I would say that you are driven. How's that? We'll just change the name of it. We'll just say you're driven. Okay. Liability policies to your primary home. Make sure that you have an umbrella coverage that would cover for a business issue if you have that kind of or don't have that kind of coverage. Do you carry business insurance in addition to what your broker may offer you? Do you have coverage for cyber fraud claims against you or your business? And if you're running it as an LLC, you need to make sure it's on your LLC coverage, okay? And protects you individually and your business. Does this cyber fraud insurance protect for potential wire fraud? Because some cyber fraud insurance protects for hacking into your account, but it doesn't necessarily protect in the event that there's a resulting potential wire fraud because of it, okay? Are you aware of your exclusions for coverage for cyber fraud? It could be something as simple as not having dual encryption process in your email or failing to change your passwords at a minimum every 30 days. Many insurance companies have exclusions for coverage if you can't prove that you are redoing your passwords every 30 days or that you don't have a dual encryption process on your email. So many of the free emails don't have dual encryption. So if you were doing a free email of any kind, you need to contact them and ask, is my email dual encrypted coverage? And if not, if it is, can you send, verify that in writing with me? So that you have that in your system that yes, it's dual encryption coverage. Because if you don't, and it's just basically like one of the old free email systems and you don't have dual encryption, federal court has already ruled that because a broker failed to require and the realtor or agent did not have dual encryption process coverage, so they were 80% liable for a wire fraud scheme that happened, even though that broker and realtor were the listing agent and had never personally communicated with the buyer. Sent from the listing agent's email to the buyer, and they were found guilty because they didn't do these two things. And the court's opinion actually references these two things. Okay, let's see here. Sorry, I'm trying to move some stuff around so I can see it. Okay. Let's see, is there another one? Okay, we're going to talk about this one and then I'm going to take a break for you guys, I think, here in just a few minutes. So top liability risk for realtors that I'm seeing, and that I've done a bit of study on this that has come out, and there's some really great things with the National Association of Realtors that talks about these things. Top liability for risk for real estate professionals are theft and burglaries. And I'm talking about from your car, stealing your laptops. Okay. I'm talking about stealing clients' personal data. Okay. These are big right now. If you are in any area of the Metro Atlanta, like Fulton, DeKalb, Cobb, Paulding. Do y'all know what lock flipping is? Do y'all know what that is? What the police refer to as lock flipping? It's where you have a group of people come through your neighborhood and they literally run through the neighborhood checking the locks on the car. They call it lock flipping. They're flipping the locks to see if the car's open, and they're going into the car and stealing your information or your stuff out of it. It can be something as simple as stealing your insurance card. Now, I will tell you what has been shared with me from some of the gentlemen here in Cobb County that are police officers is a lot of this has to deal with cartel rings and drug rings and gangs and they take your personal data and they try to steal your personal data because that's where they really make their money. But if there's credit cards in there, if there are laptops in there, and they go in there, they can find all sorts of information, your client's pre-approval letters, all sorts of stuff if they can easily hack into your insurance, into your computers. If your computers are not password protected on the outset of opening them, they need to be, especially your laptops that you carry around. Your smartwatches need to be, if you're getting emails on your smartwatches, need to be password protected. Your phones need to be password protected at all times. Okay. You guys are not going to like what I'm going to say on this one for a liability perspective. I even believe that if the courts would go so far as to say that if you don't have a dual encryption process, that if your smartphone gets stolen or your smartwatch gets stolen and they can hack into it and it causes client damage to your client because of their personal information being stolen off of there because it wasn't protected properly, or you were using it for both personal and home use, that you could be liable. It's kind of just sort of that rolling stone of the avalanche of what could come as far as liability in these situations. So please be really careful about making sure everything is password protected. I'm a big advocate. The watches, especially because they're so easy to flip off, those iWatch bands are really easy to take off. And somebody who's good at pickpocketing would be able to take that off pretty easily. I don't get personal information or emails on my smartwatch. I just don't. On your cell phone, I would highly encourage you that if you're going to get business email on your cell phone, that you have a separate personal email. We're going to talk about some of the things with searches and all of that, personal computers versus business computers as well. Okay, so theft and burglaries are a huge one. Even so much as locking up data in your home if you have a home office. If you are getting personal data about people's finances, pre-approval letters, things like that, or you're getting proof of funds in the form of bank statements, you should have a locking drawer in your house as to how to keep that information safe. If you were ever to have a claim that their personal information got out there, their bank account, something got out there and something got stolen, and they were to try to make a claim against you for not protecting their data in your home office because somebody that was at your house for a party went in there and got it, or a cleaning person or somebody, got into it or found it laying around, your insurance might not protect that. And you got to look at the exclusions for each policy if it wasn't properly locked. Okay. Auto accidents is about 5% of the liability claim for realtors. That totals 5%. And reputation harm or libel and slander. That's about 5% of the liability claims as well. I just want to see really quick for you guys. And I don't know if you are a realtor or if you are I don't know if you're a realtor or an agent. Okay, let me start with that. It doesn't matter to me if you're a realtor or an agent. It has no bearing on what I do. Here's the one thing I do want to tell you. If you are a realtor, you have the Georgia Association of Realtors guidelines and rules of ethics. Are y'all aware that you cannot speak negatively about another realtor or another agent in public? So you can't go to a listing and say, oh, you don't want to use that person. They're new. They just got their license. They don't know what they're doing. You can't do it. You cannot do it. And where we see the liability for slander and libel is where they write things that are derogatory about or say it about other people. It's just not professional. Let me just say this to you. In my office, I have like supersonic hearing. I hear everything. So when you're whispering at the end of my table, as big as my table in my closing room is, I can still hear you. I can hear the most fine whispers. It's annoying. Trust me. I know, but I can hear you. So I know like probably the top 10 people in West Cobb, Paulding area that none of y'all like to work with because I hear y'all whispering about it all the time. Okay. I hear what you say. So, and although you don't say it direct to me, I get to hear it. So I'm just not an advocate of it. If you're dealing with an extraordinarily difficult real estate professional, talk to your broker about it. Guys, we teach CE classes on how to handle the most difficult people. We teach CE classes on this, and we let you role play. So you get to role play in these classes and come up with ways to kind of handle them. I'll tell you my favorite way of handling somebody who is trying to insert themselves into a transaction that they're not a party to, because you guys aren't parties to it. I'm sorry to hurt your feelings, but you're not a party to the transaction. You're the facilitator. The parties to the transaction are the buyers and the sellers. You're not a party to the transaction. You're not. You are a significant role bearer in that transaction. And I think most often you guys set the tone. By the way, your clients also don't need to know every single thing that the other realtor ever said. Why are you trying to get your client mad at the other realtor? That's just making it more stressful for them. They don't need to know how difficult the realtor was on the other side all the time. Now, if something's going awry and they're blaming you, then sometimes you have to say, look, I'm trying to get you an answer. They're not responding. That's one thing. But for you to go and say, oh, she called me this name and that name and said you were doing this and you were doing that and blah, blah, blah. That's unacceptable behavior. That's unacceptable opportunity for you to even bring your client into it, in my opinion. Okay. Your client doesn't need to know all of that. And I know it's hard because there are things that we find out from the lenders that they won't tell you guys. And we really try hard not to get between you guys and the lenders. We really try hard, but there are times when I have to come to you, and I've had to, and Sandy's on my screen so I can actually see her. And I've had to do it with Sandy before, where the lender was telling them, like, they have the package, blah, 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 blah. And I'm like, Sandy, girl, we don't have the package. The processor's telling us it's not closing today, but the loan officer's saying it is. So it's really ineffective in you being able to handle that, because your client wants to have the best possible experience, and you telling them every detail of the minutia of how difficult another realtor is or another agent is not making them have the best possible experience in their purchase and sell. It's adding more stress to them. And then at the end of it, I promise you, they will always look back on that and say, maybe my realtor was a little bit immature, or I really want somebody who's, maybe it's my realtor that was a lot of drama. So just kind of keep that in mind, if you will. And I don't care how close of friends they are to you. Don't tell them everything that goes on. If it comes up later, or you have an opportunity later, say, look, just so that you know, I want you to be aware of all the things that went on. There was some difficulty, and that was why there was some tension between me and the other realtor. She was, in my opinion, there were issues that went on that didn't need to happen, but I didn't share all that with you. So if you felt tension in the closing room, because I've had that happen before, where the one side leaves and the other side's kind of left in there like, why is there so much tension? Well, there were things that you didn't need to know about during the negotiations that just kind of made things difficult. And I didn't share those with you because I didn't want you to have a bad experience. That's not degrading anybody. By saying things were difficult, that doesn't mean it was necessarily the agent or the realtor. Just there were some difficult things that side didn't like, whether it be the buyer, the seller, whatever. Somebody didn't like it. And if they want specifics, say, trust me, you don't even need to know it. I handled it. That's what I was here for. They're just easier ways to handle things, I think, than making your client mad at the other side. Because inevitably, in this day and age where people are not afraid to speak out and are not afraid to say things, we've had closings where, unbeknownst to you, this was going to happen. Your client was like, why were you such a jerk during the process? And I'm at the end of the closing table going, my door's right here. Y'all let me know when you're ready to proceed, because this doesn't have anything to do with me. I tease people all the time. There's a reason I sit right by that door. I want to be able to move out when y'all start swinging, because I want to be in the middle of all of that stuff. I'm getting out. So I would just say, be concerned that you don't have control of what your client says when you get to closing also. And they may say something. And we actually had a client recently who said to the agent on the other side, actually said to her, why wouldn't you submit the offer to the seller on our request for repairs? Because that's what their agent had told them they thought happened. And she was extremely offended that I did. And then the seller spoke up and said, she did, but I told her we weren't doing them. So there are times when you think they haven't submitted it and they have, and maybe their client's just being difficult with them, and all they can tell you is the client's not doing it. But you can request for proof of submission or whatever, and we'll talk about that too. So please be careful with what you're saying and in your business, and the liability that comes from everything that comes from our mouths. In this day and age, everybody's really sue happy, and everybody is really apt to pursue things that they don't need to pursue or cause more drama. And I know that the last 2 years have been really difficult for a lot of people. And I know a lot of people have been in their homes, and they're frustrated, and they're tired, and they're exhausted. And when I said there's no tired like Disney tired, the last 2 years, I don't think there's any tired like real estate tired. Those of you that have been sloughing it through these last 2 years, we're exhausted, right? Everybody's exhausted. And because it's been insane, just the volume was crazy, but the number of calls and the people being scared and the values increasing, it's been a unique market because we had values increasing extraordinarily high. And then at the same time, there were very few homes in the marketplace to be purchased. Then you have companies coming in and buying up a bunch of the homes and not putting them back out for sale. So there's less homes to be bought because companies are buying up for rentals and they're mass buying them. So it's just created this sort of tornado effect in the stress levels we have. Plus, people are already stressed about everything going on around them. Nobody's happy that they're paying what they're paying in gas. Let's be honest. It doesn't matter who's in office, whatever. Nobody likes paying more for gas. All of our commodities have increased. I don't know if you've looked at your power bill, your home gas bill. All of these things have increased. Your grocery bill, my grocery bill is twice what it was in 2019. It's doubled, more than doubled my grocery bill. And my kids aren't eating much more. So you've got to look at some of those things, and it's stressing a lot of people out. And so people are more apt to say things right now that are confrontational, I feel like, than they have maybe been in the past. So be careful what you tell your clients, because they may just repeat it at your closing table. And then we're all in an awkward position, because I don't enjoy it either. Okay, let me see where we're at on the next subject, if we want to move on. Let me go ahead and give you guys about a 15-minute break. Let's see here. It is, because I have to do this exactly right. Do not log out. Here's what I want you to do. I want you to turn your screens off. Just do stop video and mute it. I want you to do that piece of it and do that part of it. And then what you can do is go ahead and put in chat your name and your license and your email, so that we give you credit for that. And then when you come back at the end of 15 minutes, you're going to do the same thing again with your name, ID, and your email, and start the process back over again for the second half of this. Because they do check this. So if they do audit the school that we're doing this class through, they will check our chat screens and see who all was logging in, who was logging out, if you're participating, if you're actually watching the videos or whatever. So, and watching the classes. So if you will log out by going to chat and put your name, license number, and your email, and then click on stop video and mute so we don't hear you. And that way you don't have to log off and try to log back on and get kicked off or anything like that. Okay. And then we're going to come back at 11:43. Is that right? No, I'm sorry. We got 15 minutes. I can't even see that. What does that say? Oh. Okay, so we're coming back in 15 minutes. So you're looking at coming back at 11:53. Is that right? 11:53. So we will be back then. And I will go through the chat during this part, during the break, and I will find your questions and start answering some of those for you, because I needed to get through some of the other stuff. And some of them I'm not going to address if there's specific questions regarding your taxes that I can't answer based on them just being more specific to you directly. So let me just look and see if there's any questions I can answer for you. And some of them may have been answered as we proceeded forward in the class. I'm just letting everybody, I see everybody trying to log back in, so I'm giving everybody a second before I start to log back in. Looks like most of you have, but let's just give everybody a moment. Okay, I have two questions that I saw on here that I'm going to address really quick. One of them was, how many properties can you exclude in a lifetime? Because I think it was 1997, the IRS did away with the one-time exclusion rule. So they can do multiple properties. There is not a limit that I have been able to find. I was actually asked this recently and looked it up and never could find any type of limit for that. So it is every 2 years they can, and with no limit on being able to exclude the income from your primary residence, sell their property, and whatever income they earn under that 250 or 500 is tax-free monies to them. I also had a question about 1099s. Let me talk to you about this really quick. Every single closing, the IRS requires us to issue a 1099. Okay. I have to issue a 1099 on every single closing. We do not know what your client's tax basis is. I have no way of knowing what a seller's tax basis on their gain would be. None. I don't know their personal taxes. I don't know what their marginal tax rate is. I don't know what they use the property for. I don't know what their exclusions are. If they do owe taxes, let's say this was an investment property, I don't know what their write-off is on it. I don't know any of their deductions. The only thing I can tell you is we issue a 1099 based on their part of the proceeds. So if they're part of the sale, so if they're getting 50% of a $200,000 house and somebody else is getting 50% of a $200,000 house, we issue a 1099 for each of them for $100,000 because that was their part of the ownership of the house, right? Let's say that their part is 35%. They get 35% of the sales price, a 1099 for 35% of the sales price. And the other person will get 65% of the sales price as a 1099. But I have no way of knowing what their capital gains rates are, what their tax basis or analysis is. There's no way for us to know that. So in my office in particular, we keep it limited to you get a 1099 because we have to issue the 1099s. And that's it. We issue them based on the sales price, not their proceeds, because if I issue it on their proceeds and they have deductions, I don't know that. So the IRS requires that we issue a 1099 on their sales price, and that's what we do. Okay. And it's up to them to file their tax return and say that they sold a primary home. I know on a 1040, it's literally a checkbox that says, have you sold a primary residence this tax year? And you basically check a box. So they would do that. And then if they have deductions or exclusions on it, if it's an investment property, their tax advisor would be able to tell them what part they get to write off or what part they don't. If it is a primary residence, their tax advisor can tell them, if it's less than 2 years, if they qualify for an exclusion, or if they don't qualify for an exclusion, then their tax advisor will be able to tell them that. I don't get into giving tax advice in my office. I don't give tax advice to clients, to sellers in the office of, oh, you're going to get this free and clear, or no, you're going to have to pay capital gains rate, or it is, you have to ask your tax advisor because I can't give you that information. Does that kind of help all of you that have asked that question? So 1099s are issued to sellers on the sale of real property, and it's up to them to file their tax returns properly. Okay. To the degree even that we will have clients come back and tell us, you inappropriately issued a 1099 at closing and the IRS is sending me a tax bill. Did you disclose to the IRS that you've sold your primary residence? Because it's a question on your tax return. Did you give that information to your accountant? Okay, they're required to do that. So that's on them to submit that with their tax stuff, to do their tax returns. And if they don't have a tax advisor, I can't give them that advice because I'm not a tax advisor. Okay, I can't tell them what they can deduct. They'd have to go to the IRS code and determine what's deductible for their situation and, do the best they can to submit it on their own if that's what they're going to do. Because we do get a lot of questions. I know a lot of people don't have a tax advisor or have somebody they go to or a tax company that can help them. So they really are left to go to the IRS website and figure it out for themselves. Unfortunately, that's really all there is for it. Okay, if you have not logged in, please do so. Log in, name, ID, and your email. Okay, those were the only questions I found on there. If you had a question I did not answer, please re-put it on chat because those are the only ones that I saw. Okay. Sorry, I'm trying to move this around and it's not working. Okay. Top 7 real estate lawsuit risks. These are actual lawsuits, not necessarily just liability. Lawsuits. Failure to disclose, and this came from CRES Insurance, Crest Insurance. This is a national source that they released the data on. So I put the source on there. If you want to go and look on there and look at the top 7 real estate lawsuit risks and Google Crest Insurance top real estate lawsuit risk, they give you all this data on it, all these examples of how things have happened and what's defined as breach of duty, breach of contract, all of that. Failure to disclose is, I would agree, the top one. That's if there are 2 things that for GREC that you have real estate complaints filed on you between GREC and GAR. They are failure to disclose information or failure to communicate. Those are your 2 right there. Okay. Failure to disclose is if you know there's something that you have to disclose and you don't do it. Or the other side of this is, remember when we were talking about realtors putting themselves in a position of being a party of the contract when they're not? We have seen situations where a realtor will say things like, yes, it's on public water. Never ask the seller. Or failure to disclose a repair. If they knew there was a repair done and it's still in a latent defect form and they were asked for information on it and they have knowledge that it wasn't done properly and they don't handle it correctly, those are all things that we have. Breach of duty to your client. This is really situations where you're disclosing things that you should not be disclosing about your client. My clients are going through a divorce, or my clients recently went through a divorce. Look, if your contract is not dependent upon obtaining a court order for sale, you don't have to list the court order as a contingency for your contract. Okay, so if it's not listed on there, you don't have to do that. You only have to do that in situations where it is a problem for your client in the market because they didn't do what they were supposed to. So in other words, breach of duty would come in, let's say, hey, if you counter with 280, my clients really can go up to 350, even though the letter of loan approval says that it's 325. Okay. You can't disclose that stuff. That's a breach of duty. Like, you can't do that. You can't disclose your client's financial status or standing, or their personal status or standing. Well, my clients had to file bankruptcy, so we have a problem. We're super cautious when we have a situation. So let me explain bankruptcy to you really quick so you'll understand this really fast. For those of you that don't know anything about bankruptcy is a really weird nuance of law. Okay. You have people that will file for a bankruptcy court issue, right? You'll have for them file bankruptcy for, let's say, their primary home. They're filing on a second lien that's on the property. They have a first mortgage and then they have a second equity line. During the downturn of the market, and some of the rules on this have changed, they could bankrupt their second mortgage, or even sometimes their first. And on their second mortgage, if they bankrupt it and there's a first mortgage that's on there, they are not paying on that second mortgage because they're no longer personally responsible for the debt. But that second mortgage is secured to the title of the property. If the bankruptcy attorney did not strip that lien, that loan still has to be paid off when they go to sell. It just sits out there, okay? Because it's a secured transaction, correct? Okay, if it's an unsecured transaction, credit card debt, wherein there was no lien filed on it, and there's a credit card situation and no lien was filed on it, then that credit card debt is no longer personal or has to be paid. Okay. But if that credit card company got a judgment against your client and they filed a lien against the client, that lien has to be paid when we sell because that lien wasn't stripped. Okay. So let's talk about that. Your client files bankruptcy and we find a lien and we share with you, hey, this is your seller. So we know they have questions. We're going to share with you what's going on. We try to remember to tell you, don't share this with the buyer's agent because you're not supposed to share that unless the seller agrees to allow you to share it. I would not even share that your client had filed bankruptcy and we're trying to find a payoff. I would just simply say there's an old loan out there that they thought was paid off and we have to obtain a release. That's what we tell the other side because it's not our job to tell somebody that another person has filed for bankruptcy. Okay, even though it's public record in the federal court, it just doesn't need to be done because they're going to claim breach of duty that you told them something. What if you are a listing agent and you tell a buyer, look, they'll take $440 for the house and you've offered $430? Is that a breach of duty? If you haven't submitted that offer over and the seller hasn't done that yet, then you are. I have clients here who brought their babies by to see me, and I'm in the middle of y'all's class and I'm looking at babies in my window. So that's why I'm smiling at everybody. So just so you know, I love babies in here. Breach of contract. What if you have a duty to, in your contract and in your listing agreement, you put that you're doing certain types of marketing and you don't do that? It's a breach of contract, right? You didn't do what you said you're going to do. What if you never listed the house in FMLS? And you just took whatever offer came off of your Facebook post that, hey, this property's coming soon. Let's, do it before it goes live, which is a whole nother violation and issue. Negligence. A great breach of duty case was a case out of Florida. Client had a wife who was not paraplegic, but really needed a swimming pool at home for physical therapy things that she had going on. Really, really, really desperately, direly needed that. And they looked for all these properties and found all these properties with pools in them. He showed them all the properties, but and convinced them to take a property that his brokerage also had listed because it was the best property for what they needed, because in his opinion, it was a better pool. But he did not show them 2 homes that had a pool inside, which would have clearly been better for the wife in that situation, but didn't show them to him. And so they said, you had a breach of duty and a breach of contract and not showing me everything available to us. And we would have much rather had the house with the pool inside, because then we didn't have to worry about weather and whether she could exercise and do what she needed to do for her physical fitness stuff. So that's another one. Also might be under a negligence issue for that claim as well. Bodily injury and property damage. Bodily injury, driving them around a car, them getting damaged on something of your personal property or getting out of your car, whatever. Property damage is another one. Do not give anyone access to lock boxes if you're not going to be there. Don't let clients meander through somebody else's home without you being present in the home. These are all lawsuit risks. We've seen a number of realtors get sued for allowing clients to remain upstairs when they come downstairs to turn things off, or to remain downstairs while they walk upstairs, and everybody has cameras. You just need to assume that there's a camera in every room that your client visits. And you need to tell your client that. Assume that every room has a camera, every room has a microphone. Don't say anything you don't want the sellers to know on camera, and don't do anything that you wouldn't want to have videoed. Okay. We actually had a client who opened a bottle of wine at somebody's house one time and celebrated because they were putting an offer in on that house. So they drank a bottle of their wine, and they brought their video camera and said, look, you owe me money back for this. Like, this is unacceptable. You can't do this. Failure to keep client data secure. We've talked about this a couple of times. So let's stop right here and talk about this. I do not want you to have a business/personal computer. I don't. I think you need to keep your business stuff separate from your personal, because you tend to shop online and do things online that causes more risks. That's one way to have hacking happen and phishing stuff happen. I really think you need to have a separate laptop from business than personal. Put all your client data on one laptop, secure it, You don't really have to take it anywhere with you unless you're on vacation and just need it. Don't log into open hotspots. Don't go to Starbucks and log onto their hotspots. If you need a way to log on and a way to get access, if you're a Verizon customer, you can actually order a VPN box where you have to log into their VPN, which is more secure than open data networks, those kind of things, and it doesn't allow other people to use your network. All of that stuff is really intensely important to you in protecting your clients and protecting your clients' data. Again, locking up information. If you're going on vacation, if you have a safe at home, I'd recommend that you lock up your business laptop if you're not taking it with you. I'm also an incredibly big advocate for you setting up. You can set up on most websites auto prompt for business. I think FMLS lets you do it to auto prompt you every 30 days to change your password. You need to set up the auto prompt on your business email to change every 30 days. Never use a personal password for a business issue. Always keep your personal and your business password separate. Don't reuse the same password over and over and over. All of these things are extremely important to keeping your clients' data safe. Misleading a client. No, the Customer Protection Act can be used to pursue a realtor who has misled a client. That is a federal Consumer Protection Act. And you can be wrapped up in a federal case for intentionally misleading a client. It also can lead you into some fair housing, because a lot of misleading comes into fair housing issues. Guys, look, I don't mess with the IRS. I don't mess with the federal government. I don't trust them anyway. I just don't, because they're not out for your best interest. And I'm going to show y'all something my husband texted me and said, just in case they were wondering in your class. I don't know if y'all can read that. Can y'all read that? Do y'all see that? No, you can't see it? Let me see. Oh, I know why. See if y'all can read that. Do y'all read that? Can y'all see it? See what it says? That's what I think of the IRS. They think everything's theirs, right? I mean, it is what it is. So please, please be careful with some. I mean, I know it's being joke and it's a meme or whatever, but it can be certainly true. Crest Insurance has some incredible resources on liability and lawsuit protection that's in their system. Go on to the Crest website. It is phenomenal. Go in there and look at the liability lawsuits. Go in there and look at all the liability information. Go in there and look at everything. And just take an opportunity to look at all of that and look at everything in there, because there are some really great tidbits of information. There also is a real estate protection brochure in there, what to think about as a realtor on protecting your liability in your home. And it gives you some really good information on different types of policies that could be available to you as a business owner. Okay. Risk is associated with for sale by owners or unrepresented buyers. Let's talk about this one for a minute. Okay. Let's talk about missing deadlines first and foremost. Do y'all have a calendar that you use? Are you looking at it every day? Are you reminding your clients of what they need to do, even if it's their responsibility? Are you doing all of that on a daily, weekly basis? Are you looking at everything? If you're not, that could be a negligence, a breach of duty issue for you for a lawsuit. What about misrepresentation? Misrepresenting to the buyer or for sale by owner, misrepresenting to the seller information. For sale by owners are particularly wrought with problems, because you are a licensed individual who has a higher standard of care. Representing a dealing with a non-licensed person, a person who doesn't have fiduciary responsibility. What about non-disclosure? You know that your client is an investor who's going to start trying to market that property before they ever buy it. Have they disclosed that to the seller? Any of that? Agency and fiduciary duties, fair housing issues come up, misleading in advertising comes up, especially when it comes to they don't actually own the property yet, and they're relisting it. I get a lot of complaints on this for sale by owners. The other thing I get a lot of complaints on with for sale by owners is, they don't really want to deal with a realtor and you bring somebody to show them, and you get the authorization to show unlisted property, or you get them to sign something to allow you to show the property, or whatever you're going to do. And you don't tell them that you're bringing multiple people over, or you don't give them all the information, or you don't tell them that the loan has been denied and that they're going to get another loan. You don't tell them that they've changed the loan program. All of these different types of things. So please, 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 be aware of that. Separation of home and work. Guys, if y'all don't take anything else from what I tell y'all today, this is a really big one. So just so y'all kind of know where I stand on this, let me just back up and tell you a little bit about myself. I appreciate every bit of business I get. You all are very important to me, and my business is very important to me, but it's not as important to me as my family. Just not. I'm not going to even pretend that it is. It's not. My family will always come first. With that being said, I have been advocating to the Georgia Association of Realtors for changes in your GAR contracts. There's two big ones that I've been asking for. You are not a 24/7 entity. You're not. And people should learn to respect your time. I have actually this year had a seller call me and say, I couldn't get a hold of them, and we had a deadline coming up, and it says till midnight. Shouldn't they have answered my call? No. It's unreasonable to expect them to. Just because you have a deadline at midnight and you didn't do what they asked you to at 6 or 7 doesn't mean they should still be available to you at 11 o'clock. If you miss your deadline, that's on you. Sorry. I'm advocating for the Georgia Association of Realtors to change your deadlines to a more reasonable time, 7 or 8 o'clock. And have that already in there, 7 or 8 p.m. Eastern Standard Time, which is our time code. Because if you can't get it done by then and you're waiting to the realtor, you're just honestly being disrespectful of the realtor's time and the agent's time. So you can also do a special stipulation. And I have a lot of my realtors that over the last 2 years have started doing this. All deadlines end at 8 p.m. on the day that they are set to end, 8 p.m. Eastern Standard Time on the day that they're set to end. Okay. No deadlines herein shall run until midnight. So it forces everybody to work more reasonable hours. Now, look, I understand that you've got to work, 6, 7, 8 o'clock at night, because that's when everybody's off work, right? I get it. After 8 o'clock, that's family time. Really and truly, it's family time. There's nothing so dire that you can't wait till the next day. And if they've waited till the 11th hour to work on their due diligence and for their request for amendment to address concerns, they just waited too late. That's not your emergency, right? I have a sign in my office. Your failure to plan does not constitute an emergency on my part, right? Now, look, do we really work hard to get everything done for you? Absolutely. And we will make exceptions whenever we can and whenever that works out and it's feasible and all the sort of stars align or whatever. There are just times I can't be available. And there are times that you guys can't be available, right? So we're not a 24/7 entity. The other thing about planning is I want you to find a buddy, a business partner, a business mentor that you can say, I got to have a mental break for this next 7 days. I'm going to be on vacation. And you give them your business phone to answer your calls for you. I want you to have somebody answering your emails for you. Guys, you need a break. You're not the only person that can do your job. There are lots of successful realtors and agents out there. You got to have a break, right? So this year, because it was the first year I really was able to, in a couple of years, to be able to take a full vacation without a lot of interruptions, we went to a place that we love going. It does not have internet access. And it has no cell coverage until I get halfway between the island that we go to and the mainland, which is not far. It's just the island doesn't have a lot of coverage, even though the next island over is fully covered and the next island on the other side is fully covered. This one doesn't have a lot of coverage, and I love it. And so when I get out in the water every day and we're out on the boat halfway between the mainland and where we're staying, funny enough, my phone will start going ding, 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 ding. And all that's just getting auto responded to you all over the week of vacation, unless it was something that you really needed me for. I wasn't making those calls. Heather and Teresa in my office, as the attorneys that are here, we're taking those calls. Okay. And yes, I can give you is the 8 p.m. deadline stip available in the GAR library? No, it is custom. So you have to write one. Most of your brokers have a deadline one in there. I have written one a couple of times for a couple of different brokerages, and they're in your intranet if you work with any of the brokerages that I do a lot of business with. Okay. So you can look for them in there. So they are in there for you. But you can have one written. Okay. What next? Let's see here. Next one. I hope you're getting something out of this. Maintain separate accounts, banking and checking and credit cards all need to be separate. I don't care if you have an LLC or not. You need to have a separate business banking account, period. You need to have a separate credit card, even if it's in your personal name, that you only use that to do that. Have separate computers for work and home. And by the way, your cell phone is a computer. Remember that Apple systems and the iOS systems now have a password link in your systems. Apple systems save passwords on their password app. So if you're logging in from your cell phone, it's saving those passwords. Please be cognizant of that. Do not use any variation of a work password for personal account, and do not use any variation of personal password for a business account. And you need to be doing your business email, personal too, because I do my personal and business. You need to be using your business email. Truly, guys, you need to be using your business email and changing that 30 days. Some people even set theirs for 15. Change it every 30 days. Okay. Do not allow your family or children to use your business computer, phone, or electronics for their personal use. I want to tell you something really quick. My husband and my kids call us the computer Nazis. And we're very serious about it. Very serious about it. You're not using my business computer to do your homework. You're not watching YouTube on my business computer. Okay. You're not getting on my cell phone that I use for business at all to play on. There are no app games, none of that stuff on there. TikTok on your business. And in case y'all didn't see the new release on that, did y'all see the big release on TikTok recently? That they are acknowledging that they are taking all of your phone data, contacts, and information and storing it in their database systems. Did y'all realize that? Because they're the creators of TikTok. Be aware of that. Why would you put that on a phone that you use for business? I don't understand that. Okay. Just be cognizant, because you are in a financial industry where people are getting loan approvals and wires are going out and things are happening. You got to have all of that available. And so, okay, so I'll get off my soapbox for that for just a moment, but my kids know not to ever touch my business computer or my business phone. Just make it a rule. Just make it a rule. You can't be on my business phone. You cannot touch my computer. My husband doesn't, my kids don't even have our passwords to either of those two things. They're not allowed on them at all. Okay. Now I want to talk to you a little bit about, and guys, your kids can do something, the most meaningless thing. They can be playing an alphabet game and it has spyware in it and they just don't know it. Okay. So it's not that I think any of our kids are going to do things intentionally. You just don't want them to be on it. Business lenders, let's talk about loans and liens and defaults. Business lenders look at both the sustainability of your business and usually your personal finances. So they're going to look at your business records and your personal financial records. Liens are one of the top issues we see with real estate professionals, especially Georgia Department of Revenue and IRS liens, and a failure to properly oversee their business. Failure to be able to pay your liens for taxes is an indicator to the businesses that want to give you money or you want to borrow money from that you are not a good business owner. Okay. Let's see here. Defaults on loans or debts can become a business disaster, resulting in an inability to obtain either a business or a personal loan. So if you get a suit against you for some debt that you have, or have a lien against you, or a default against you, and it's your business or your personal, it can prevent you, even if it's business, it can sometimes prevent you from getting a personal loan. So depending on the type of corporation you are, the Department of Revenue and the IRS will file liens against your business depending on the corporation, but they also, depending on the type of corporation you have, can file it against your business and you personally. So a lot of the liens will say, for example, let's just use Davis and Associates. Davis and Associates, under that Amee Davis, and then our address, right? That lien is then filed against my business and my personal. And we see that a lot with real estate professionals. We don't want you to ever have an issue with your sustainability or your ability to get loans. And we've had real estate professionals have problems with getting loans and problems with their business or problems with their personal because of their business stuff. Okay. You're great marketers. You're inventive. You're creative. As an industry, not the best business owners. Just because, it's not traditionally, because you're 1099 employees, it's not traditionally a business that you have a shingle that you're hanging up, right? You don't have a location. I think if you have a location, sometimes people are a little bit better because they're seeing the sort of big all of it. Whereas as a real estate professional, a lot of times you get your check, you deposit it, you move on to the next closing, and maybe you haven't planned for the up and down of the market. For those of you that are new in the market, let me just tell you this. I'm going to give you a spreadsheet, but I want you to do something for me. I want you to, number one, stop counting your money before you have it in hand, because closings fall through all the time. Just happens all the time. Those of you that are, I can see some of you shaking your heads like, yep, been in here long enough. It happens. The other thing I want you to also really start doing is putting money aside, whatever your marginal tax rate is. I would recommend you have a third account and put your tax money in there so you don't even see it. Because what happens is, if you see that money in your checking account, you're like, oh, I have 80,000, 65 of it's got to go to the IRS this year, right? So you got to move that over. Just if that's easier for you, like an escrow account, you're putting it over there. So when your taxes come due, Mabel, you got the money separated. Great. The money's separated. The other benefit of having it separated is if you ever get your account hacked, your business account gets hacked, that money is not at risk because it's in a completely separate account. And you're not really writing any checks out of it, except for a check to the IRS, or you're moving it back over to your business account to write a check to the IRS. Okay. So be careful with that. And then the third part of it is plan for the downtime, plan for the bad months. Okay. Y'all, November, December are traditionally really low months. And let me just tell y'all, the market that y'all hit this July, so the market right now is not the same it was 7 weeks ago even, is it? It's a different market right now than it was 7 weeks ago, right? So even that, when you hit an election year, and I don't care what election year it is, every 2 years we sort of see this slump starting the beginning of July. And we start seeing it taper off in the middle of July and a little further, and then school starts back. Election years every year, because what? Markets don't like instability. And we don't know what's going to happen depending on who gets elected. And then it doesn't matter, once the election's over, you start to see home sales increase again or whatever. So just be cognizant that every 2 years on election, you're going to have a slower end of cycle coming from July, August, September, right? Those of you that have been in the industry, I think, would agree with that. You're also going to need to plan for August and September to be slower, because everybody just got back into school. Nobody's looking to move when they first get back to school. We're just trying to get our kids where they need to be on time every day with the gym clothes they have to have so they don't get in trouble with not having gym clothes, right? I mean, am I the only one? We've got that. And then on top of it, softball and lacrosse and band and all the other things that my kids are into. And so that we have to make sure we take everything every day. So I'm saying that to you because it's not sort of a smack against you individually. It's just traditionally we see these issues arise with real estate professionals. Okay. Now let's talk about a couple of other little things. Okay. Failure to oversee and review and reconcile your books is the number one issue I see with theft from your business, or not planning properly because you're not overseeing your stuff and you don't know. You should know your available funds less your taxes owed at all times. I can tell you right now what money I have in my business account and what money I have to write to IRS at all times. I can tell you. Failure to maintain proper records, failure to hire knowledgeable professionals. If you are a realtor, you better have a tax advisor of some sort. You better have somebody that is a tax person who understands real estate professionals. Mistakes, poor payroll management, failure to timely pay debts, and late updating of all records and books are a huge problem. And this is just business owners across the board. And failure to properly classify and track expenditures. Let me tell y'all one thing. My favorite thing about QuickBooks, and what's the other one? Quicken, and there was something else. There's another record keeping thing or whatever. My favorite thing about them is I know that QuickBooks and Quicken specifically have this little tab that when you don't know how to classify something, I don't know if it's entertainment or meals or if it's a florist or what, I don't know how to classify it properly. There's a little thing in there that says, ask my accountant, and you upload your receipt with the notes in it. And then your CPA, if they're as great as they should be able to go in there and they will run a report on all the Ask My Accountants. They'll go in and look at them, look at the receipt, look at your notes, and then they help you classify it to the proper thing that it needs to be classified for. So Ask My Accountant is my favorite default when I'm not sure. And it keeps me from making the phone calls, wait on an answer, and I can just keep moving because I've put the receipt in there, documented what the expenditure was for, and then they can look at it and say, oh, okay, this was for da, 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 da. And then I put the information on there. The other thing I really like about it too, is I can upload the receipts. If I've taken a client to lunch or to dinner or something, I can upload the receipts in there and put who it was that I took to lunch or dinner. And I have that information documented already in there. Okay. So there's great tools for record keeping available to you. I'm a big advocate. It's like I always tell y'all, don't go back and recreate special steps that are already created by GAR or RE forms. Don't do more work than you need to and recreate the wheel and make it harder on yourself, right? I'm a big advocate of not making things working. I really want you to work smarter, not harder. And it's the same thing with bookkeeping. If you have programs available for you, utilize those programs because they make your job easier in documenting it, and just make sure you're putting everything in there. Okay. Let's see here. Running a successful business requires you to know your break-even point, keep your extra, that's supposed to say cash, I'm sorry, keep extra cash on reserve. Always, I always have extra months because I don't know when the bottom of the market's going to fall out. And those of you that were here in 2008 truly understand this. Anybody that's gotten in the market after about 2012 to 2014, somewhere in there, if you got in the market after that, you're probably not going to understand this very well. The market fell out on us in about 40 days. 40 days was all it took for people to not know where their next paycheck was going to come from. And people were losing jobs left and right. People were jumping ship in real estate because, I mean, I can remember when that happened, when it was Home Bank that wrote all the bad checks. That was the first one we really saw in Georgia, and they wrote all the bad checks. I can remember having so many closings that just literally collapsed and fell off and the banks weren't lending. And then the lending was so stringent during those times. We lost a lot of realtors and a lot of agents in our industry because of that. Monitor your cash flow. Know what your expenses are. Do you know what you're paying for supplies for your office if you have a standalone office? Review all reconciliations. We've already said this. Know your risk and liability exposure. Plan ahead for your known expenses and liabilities, including being prepared to pay your tax payments. But be prepared for the unexpected expenses. You should always have a little extra money in there to pay for an unexpected expense, because you may have to buy a home warranty to make a closing go. You may have to buy or pay for a repair to make a closing happen. And you've got to be prepared for those unexpected expenses that you don't want to pay for, that you just need to do to make the closing go, which means you might not make $5,000 on that closing. You might only make $3,000. So that's a loss of $2,000 that you were expecting that you're not getting. Okay. All right. Passwords and cybersecurity. We've talked about this. Every 30 days, malware, unsolicited email. If you get an unsolicited email, don't open it. Don't open attachments, especially if the email says, I've seen a lot of these that'll say, dear Carmen, hey, I want to speak to you about possibly helping me find a home. I'm an international client, or I'm a client out of state. I've put all the specifics on the attached document. Don't open that document if you don't know that person. Don't do it. Multiple email accounts for various needs. Let me tell y'all about what I do. Y'all gonna laugh. I have my work email. I have my home email where I get emails from people for home stuff. I have one email account that my bills come to, and never send an email out from it. And I get my alerts from my bank statements there. So it just tells me that my bank statements are available or my credit card statements are available. But it's not my credit card statement stuff, if that makes sense. I don't send any emails from that account. And I have one email, I just got learned the other day that I need to clean it out, or they're going to stop my email because I haven't checked it in so long. It's junk emails. It's the emails I give when I go to the store and they say, we need an email for you. And I never check it. And I literally will go in there every now and then and just put delete all and delete everything, never even open them. because it's just where all those junk 20% off coupons go to. That stuff should never be coming to your work email, ever, 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 ever. Please don't send it to your work email. So I have multiple email accounts for different things. Checking on clickbait, personal data and information, never give it, never use it. Don't, your social security number is not a tattoo. Keeping your business data protected. Client information and confidentiality, you are required to protect their data. And wire instructions for closing, just say no. Remember those of us that are old enough to remember the Just Say No campaign? Just say no when it comes to assisting with wire instructions. Don't do it. Okay. Next slide. We're almost done, I promise. Exit strategy. Okay. I'm going to talk to you about this one really quick because there are just some things that I just need to talk to you about, and this is just one of them. Okay. I want you to start working, and you've got 60 days. This is your homework from this class. I'm giving you 60 days to do it. Okay. I want you to buy a binder, and I want you to buy an address book. Okay. And if you don't have a safe, you need to find a safe or a lockbox, something. Okay. Here's what I want with the binder. The binder, I want you to take, and I want you to put, if you have life insurance in there, I want you to put your life insurance copy of your life insurance policy in there. I want you to go through and make a copy of every credit card statement you have. And I want your username and password written on them. Okay. I want a copy of the deed to your house on there in this book. Any accounts that you have stuff with, okay? Anything that if you were to die, somebody needs to know how to go there, okay? All right. The address book is super important. The address book has every single username and password for your business and a separate one for all your personal stuff. So if you pass, your spouse, your children, whomever can get that to your broker to say, these are all the business things, her FMLS, all this stuff. How do I shut all this down? And they have a resource to be able to do it. Nothing worse than when people pass and nobody knows where their stuff is because everybody gets everything electronically now, right? So with the address book, I have all of, for example, in my safe, I have all of my business passwords and all my stuff in there. But here's the key to that. I change it as I change my passwords. So I make sure that I go home that night and change it in my book so that God forbid something happened to me, my husband knows what to do. I have 2 planners, 2 binders in my thing, because if something happens to me, I need my husband to get all of my data and all of my files to the title insurance companies. And the ladies in my office have been trained on this as well. So if something happens to me, what I can tell you is everyone in my staff knows how to go in, pull apart which title companies wrote what policies, and to send the entire files to those title companies so that if there's ever an issue, the title insurance company has the whole file. And that way, if another attorney needs something out of it to prove that I cleared title properly, the title insurance company can help them with that. Okay. I also have another attorney that's kind of on standby. God forbid something happens to me. He can step in and help with that as well, that those calls can go to him too, and he can help with it. So have a plan in place that if something happens, for example, Sandy, you've got somebody that your husband knows to call that's going to help handle all of your business if something happens. And that way, it. And Pamela, same thing for you, somebody that you have, and talk to your mentor, whoever you're going to deal with in that, and say, you're my person that I've told my husband, something happens to me. Here's all the information to bring it to you so you can help. And that way that person knows exactly how to jump in, finish your closings, help get your family paid for what's still sitting out there, and take care of that stuff without making it really difficult, and knows how to turn over everything else to the brokerage that the brokerage needs, and to be prepared for all of that. Same thing with personal, like down to my kids' uniforms for school come from Lands End, down to my Lands End password and log in for my husband. So if something happens to me, because trust me, as amazing as he is with money and planning and all that, he don't have a clue what goes on in that house when it comes to the things we have to do for our girls. He has no idea. If y'all ever want to play a really fun game, have everybody put 15 things about themselves on a sheet of paper, questions that they want to see if you know. And so down to what is my shoe size, whatever, and play that with your family. See who in your family really knows what's what. And it's really interesting to play. My kids asked a lot of questions about what were their shoe sizes and what's my favorite color. And my husband, by the end of the game, said we set him up for failure on a lot of that. There were just things as a dad, as a girl dad, he didn't need to know, he didn't need to know their shoe size or whatever. So, but it's always a fun game. So play that game if you ever get a chance. And then that's really a lot of it. So I'm going to let you get a screenshot of this last one. If you can do that in the next 60 days, figure out what you want your retirement age to be, talk to your investment person and find out about your investments, know where those are. You need to make sure all of that, where your investments and all of that is in your binder, your estate planning binder. They need to know where to go to get your life insurance. They need to know where your investments are. They need to know who's holding all that stuff. Where are all the records and data for the information? Who gets your client files? Who gets the business? If you're in a partnership, who gets that business? If you're a sole proprietor, who gets the business? Do you have a will that sets this out, or a trust? Do you know who's going to get all of your stuff when you pass? If not, please start working on all of that. Okay. And again, nothing in here was anything that was given to you direct as far as your personal edification and your personal stuff. And so, this is really given for generalizations and things to help you with. I hope that you've gotten something out of this. I hope that you've learned something new today. I hope that you have gotten some tidbit of information that you can take in your business moving forward. I'm going to launch this poll because I have to. I hate looking at these things, but you've got to fill this out in order to get credit. It'll document who all fills it out or whatever for the course evaluation. If you'll go in there and fill it in, I can't relaunch it once I launch it. If I relaunch it, it deletes everybody's answers. So if something happens and you can't get it, I'm sorry, but I can't relaunch it once I launch it. I am going in right now and trying to make sure that anybody, I tell you what, if I have missed a question that you maybe have, you're welcome to unmute yourself because everybody's just filling out their things right now. If you have a new question you haven't posted, I think I've gotten everything so far, but if I missed something, unmute yourself, feel free to ask the question or raise your hand and I'll open it up for you to do that. Or if you want to add it into the stuff, don't log out yet, please. Please don't log out yet. We've got a couple other little things that we have to do.
Hey, Amy, I have a quick question.
Yeah.
On the QuickBooks that you're using, is it cloud? Is it the QuickBooks Cloud?
There are two versions. So there is the QuickBooks and then there's also the QuickBooks Cloud.
Right.
You can use either one of them. The QuickBooks Cloud, I think, is the one that has the app. So it can go into the cloud and it has the app so you can use it right on your phone. Just make sure it's a business phone or a business computer that you're logging into because it has your financials in it. But yes, there are two different versions. Mine is not a cloud version. Mine is actually a server version that I use here in my office.
Is that the same as the desktop version when you say server version? I have the desktop version, but I haven't noticed some of those things that you just mentioned, and I need to go look for that.
Like the Ask My Accountant and all of that?
That and uploading the receipts and stuff.
Okay, so the uploading of the receipts, you have to make sure you're updated. That's a new feature. So make sure your program is actually updated to the newest feature. I think it's like $99 to upgrade or whatever, or update.
I just did that.
Okay, if you did, it should be in there. And when you go to the right, like down at the bottom, after you write a check or whatever, at the bottom, it'll have like what it's for. To the right of that is like a little camera picture. If you'll open that up, it allows you to upload it. Or it also has a little file over there on mine. And it says add file. And I'll just scan the receipt in and then add it to that piece too.
Okay.
Yeah, I keep it separate as well. So I can, because I like to aggravate my husband and just take him a shoebox because I think it's funny, even though it's all uploaded, just to irritate him because, he loves handling
Because you can. Because you can. Yeah. Okay. Thank you.
He's not firing me, right? That's the way it's going to go. He's not firing me. Okay.
So, a question.
Yes.
When it regards to corporations, to become incorporated and all that, I am in the process of getting that complete. But I wanted to find out, such as purchasing vehicles for the corporation, all that, is that advantageous?
I'm not the person to ask about that. So I'm not even going to venture to tell you that it is. Here's what I will tell you. If you have a corporation, it is more readily acceptable by the IRS to write off your vehicle through a corporate entity than it is for triggering audits than it is if you don't have a corporation and you are running everything through yourself personally. Does that help? So for the purpose of triggering audits, it does help to have that corporation. Okay.
Got it.
But now whether it's tax advantage, look, spending money is spending money. Okay. So just because the IRS says they're going to give you a deduction, is spending that $70,000 on that new, Tesla really financially advantage, a financial advantage to you? I don't know.
Yeah.
So
I have to
I
replace,
can't hear you. I'm
I'm
sorry.
sorry, I have to replace a vehicle anyway.
Yeah.
So instead of
If it's
doing,
time for you to replace a vehicle and you need that vehicle because it's your business and it's a business expense, remember the rule on writing off, what mileage is personal, what mileage is business. You have to keep up with that stuff if you're going to write off your car as a business expense. So you just need to be able to do that. But it doesn't trigger an audit as often if you have a corporation. Okay.
thank you.
You're so welcome. Any other questions for me? Oh, thank y'all for the kind words. That's very sweet. You are very nice. Appreciate it. Okay, was there anything that surprised you in this class today? Anything that you learned that you're like, oh, wow, that's a big deal? For anybody? Okay, good. Are any of you leaving here a little bit scared that you're doing something wrong? Okay, good. So this is what I'm known for. I have clients that tell me every time they come to my class that they feel a little scared when they leave. I was at a sales meeting yesterday and one of my favorite realtors actually said to me yesterday, he said, who's next on the speaking agenda? And they said, ADavis. And he said, let me go get my vodka. And so he said he had to get prepared for whatever I was going to tell him because he said, I always bring bad news to the sales meetings. And it's not bad news. I really try to give you guys things to watch for because I really don't want to get you in trouble. I don't want you to have a complaint filed against you with GREC or GAR or have problems. I want to keep you out of that so you can just continue to run your business without the extra headaches of making mistakes. Really and truly. Yes, the cyber stuff really is the one that really gives me heartburn. The cyber security stuff, the data protection, all of those really give me a lot of heartburn. And those are the ones that really keep me up at night. If there's one thing about my business that I worry about, it's the finances that I'm dealing with that are somebody else's money. I hear, we had the attorney here in Georgia that stole all that money from their trust account. And y'all, it made me truly sick to my stomach. Thinking about that because that's not my money. It's like this big, huge case with the housewife lady and her husband, the Girardis or whatever, because he's well known in the legal field, extremely well known as an attorney in the legal field for his work on tort action cases. And to find out that he was stealing money from clients all that time, it really sours you a little bit. That's a mess. Yes, sometimes the truth hurts. I know. It's like when we're in church and my husband says, I feel like that preacher was stepping on my toes. And I'm always like, that wasn't the preacher talking to you, honey. So this is just the relationship my husband and I have. We have a lot of fun. So much great information, but no action items. Thank you so much. Did anybody need me to run back through a little bit of the stuff? Oh, I almost forgot. I'm going to stop. Please don't post anything else in chat. So if you can hear me right now, don't put anything in chat for just a second. I am going to load a spreadsheet for you. Oh my gosh, I almost forgot to give y'all the spreadsheet. Okay, it is called Knowing Your Numbers. Don't put anything else in spreadsheet, okay? In chat. Don't touch chat for just a few minutes. There is an Excel spreadsheet in there for you, okay? Can y'all see it popping up yet? Okay, let me just share my screen with you really quick. I want to show you what to do here. Oh my goodness, I cannot believe I almost forgot to show you because this is the last thing I always show everybody. So hold on one second and let me open this up. I'm going to share my screen with you and share with you how this works. Okay, this is a Knowing Your Numbers spreadsheet, okay? I'm not the Excel spreadsheet person, but let me just show you. This is your goal sheet right here. Let me see if I can open this up wide for you. Okay. So how many lead conversions you want, what's your goal for your income, your average sales price, your average commission, and your tax bracket, okay? These numbers here are the average that we see expended in real estate for the percentage of income, okay? And these numbers came from, I think, the Georgia Association of Realtors, but I can't remember exactly, but I think it came from the Georgia Association of Realtors. Because guys, when I put these classes on, I do a lot of research, okay? But these are the average numbers that you spend as a realtor or whatever. And here's your total expenses, depending on the number of closings you have and net income after expenses, what your total percentages are, all of that. And then you can set your goals, but watch this. your commission tracker right here. You can go in and put your client name, all of that, put your sales prices, the commission you earn on each, all of the stuff here, your FMLS fees, and your tax holdback. So you know how much you need to be holding back based on what? What you put in here as your tax bracket. Do y'all see that? So it allows you to put your information in so that we can see, or you can see, okay, if I have this, and so here's your lead conversion, it's all on this Excel, you know, how many appointments you want to set up for the year to make the lead conversion you want, what it's going to cost you, all of that. Somebody needs to mute. Let's see, I'm just going to mute everybody again. And then here, look, this is the tax holdback. This is the amount of money that you need to be holding back for taxes and holding back for expenses for your next listings. Okay. And then this is your net commission. And then this is your net commission here, your monthly fee, your yearly cap, your total, all of that's in here for you. Okay. So if your yearly cap is 6,000, or if you have a percentage, because some of you have yearly caps with your company, some of you don't have yearly caps, some of you have a percentage of each closing, whatever you're doing, you can enter it in here and track all of this for yourself. But remember, here's your tax holdback and your expense holdback. Okay. Right there. Got it? Okay, I hope that helps you. All right, and that is in the chat. So I want everybody to go in there and pull that from chat. Please don't log out or put your name or any information in chat yet. I'm going to give everybody 3 minutes to go in and try to download that. And then we're going to log out, okay? And then you guys will be ready to go. Does that help you guys? Is that something that's useful to you that you can kind of play around with or whatever? Okay, so that kind of gets you some goal setting stuff, just gives you some real generic. If you're not sure what your marginal tax rate is, call your accountant, your CPA, your person who can represent you in the event of an audit. Go and do that, and don't put anything in chat. Please don't say thank you, anything right now. Really quick, just please don't put anything in there right now, okay? Because I need everybody to be able to have a chance to open all of that up.
I don't see it.
Yeah, I'm not seeing it either.
I don't see it either.
Okay, is everybody else seeing it? Because I'm seeing a lot of you saying, yes, you have it and you're looking at it, right? Okay, it should be.
Yeah, I see it. It says from Dana Sparks to everyone.
Yeah, and it says knowing your numbers, and it's like I have a little green check on it or whatever, a little green icon. Yeah, that's what I'm seeing too. Guys, please quit putting stuff in chat, because every time you put stuff in chat, it rolls it up and then people can't find it. Letitia, what were you saying? I'm sorry.
I was just suggesting that people who cannot see it, that you have to scroll up or down to the bottom of the chat.
Yeah, so you have to go all the way to the bottom of the chat. And I'm going to repost it one more time for you guys, just so that you see it in here. Please don't put anything in chat, because it's really, really hard to do it this way or whatever. So it's really hard to get it in there. Okay, I'm going to repost it one more time. It should be the very bottom of your chat. You got to go all the way down to the chat, the bottom of the chat. And I just reposted it. So it should be on there twice. It should be at the very bottom right now. And then it should be about 5 comments up.
So I'm on my phone. Maybe that's the difference.
If you're on your phone, that might be the difference. And on
Okay.
that situation, I don't know how to fix that for you. I'm sorry. It's something with the settings on your iOS phones that can cause that.
Okay, thank you.
Mm-hmm. If somebody has Michelle's, if you work with Michelle, is there anybody on here that you work with?
No,
I don't see
I'm
it.
sorry.
I
I'm
still
sorry.
don't see it on my iPad either.
Yeah, I think that's what it is that we're on a device instead of on a desktop computer.
Yeah, it might be. I don't know. I have this every now and then. James, were you able to see it finally? Guys, please don't make comments on the chat. We're trying to make sure everybody has.
No, and I'm on a Chromebook, so that might be my issue.
Yeah, I think it honestly is a setting in your, I really think it's a setting in the, somebody told me the other day that it's a setting in your Zoom. When you log in, that there's some setting in there to allow you to see attachments or something. So it may be a setting on that. Let me see here really quick. I tell you what, when I send this out, you will get an email from the school I will send them an email and ask them just to re-email this out to all of you with when they send the confirmation. So I'll have them send it to you in email format. Is that good? Okay.
Yes, thank you.
Yes.
You're welcome. All right, perfect. No problem. All right.
Dan,
So
Dan, excuse me, you could actually post the picture again. And if these guys want to take a picture of the screen, it might help them.
yeah, I don't mind doing that either. But the only thing that I want them to do is have the Excel thing because it's program plugged in ready. So all they
Sure.
have to do is go in and change their name, their numbers. And I would like for them to have that so they can just use it. So I'll get it sent out to you in an email format because you're going to get a confirmation that your hours were registered. So when you get that, you'll get it in an email format. I'll have her send it to you with that attachment. Okay. Okay. If there's nothing else, you guys can go and start logging out. Thank y'all so much for joining me for these 3 hours. And I'm sorry if I exhausted all of you having to listen to all of this.
Thank you.
You're welcome.
Thanks, Sam.
Thank you. Hey guys, make sure that you're putting your name, license, and email all in one thing because it's hard for us to match up what license goes to what person.
Got it. Have a great day.
Thank you. You too.
Thanks, Amy. Have a good day. Bye, everyone. Be
Thank
safe.
you.
Enjoyed it.
Great. Thank you. Bye, everybody.
Bye.
Hey, Tracy, I didn't even know you were on here. I just saw your post. Some of you, I recognize some of you so much, but I haven't seen you in a minute. So hi, everybody. Because I only get so many pictures for screen and they change every now and then on here while I'm talking. So some of you, I didn't realize were in the class today. As soon as the last one logs out, I will shut down the system.
Yeah, a lot of terrific information. You scared me to death.
I don't mean to scare everybody, but I'm glad you got information out of there. I really am. We really do try to keep everybody out of trouble as much as possible. Nobody wants to deal with IRS nor GREC, right? Nobody wants to have to deal with anybody that's going to come and take something from them. So
We got to be ready.
You have to prepare. I know. I tell people all the time as a business owner, I'm insurance poor. I have so much insurance on everything just to make sure that I'm, protecting my family. So, it is what it is.
I spent 30 years in commercial real estate, so I see what this is about. Thank you so much.
You're so welcome. Have a great day.
I have a question. I know you were recording it. Is there any way we can also access the recording because a lot of it was very overwhelming?
I don't know how the school does that, but I can check and see if they post it anywhere. I'm not sure that they do, but I can certainly check and see. I don't know if they do or not, or if they send out a link for it. I haven't noticed that when they post the hours that they send out a link to it, but I will definitely check for you. And if they do send out a link to it, or if they have a link to it, I'll ask them to send it for you. Okay.
Okay. I mean, it's just a lot of great info, but it's a lot to take in. So.
Listen, it's a lot for me. If I didn't have that PowerPoint and all my notes here, I would forget about half of it, honestly, because there's always so much to go through.
Right.
Yep.
And as far as the PowerPoint, I mean, is there a way to ever send that out? Even though I did a lot of screenshots, I missed the first couple of ones.
Yeah, I can also, I've got it in a PDF format. What I can do is ask her to send it as well. So you'll get an email with attachments on it. So I'll ask her to send that out for you.
That would be incredible.
Yeah, because the school has to have a PDF of the PowerPoint. So I'll ask her to submit the PowerPoint and the Excel spreadsheet to all of you.
And on this spreadsheet, I don't know if it's just me, the way it's opening up or what, but I'm only able to see one sheet.
Yeah, okay, so if you go into this, I'm gonna share my screen with you. Hold on. So if you, I don't have it open. Hold on.
And like I can't do anything to open with the commission cost tracker.
Okay, so right here at the top, can you see, let's see here. Can you see this right here or no?
Yes.
Okay, so see where it says financial goal setting? There's tabs at the top.
Right.
Mhm. So when
And
you go to those, if you're, depending on how your screen's open, you may have to tab over to see it, but once you get it in the attachment, you'll be able to see it better.
okay.
What are you seeing right now on the screen?
Hang on, I think maybe it's showing the first screen where you had things highlighted in pink. So now I'm seeing that. Okay, I could not, I was only seeing one sheet with the clients number 1 through 4 and all the breakdown of that. But now I am seeing the other. I don't know what it was.
Second
I was
page.
flipping
Okay.
back and forth, but
Yeah, sometimes when I flip back and forth between the two of them, that happens. And sometimes the screens just aren't large enough for the size, because I think that when I printed this, it prints out on legal, I think, on the way that I did it. But you can always adjust it a little bit. Just know that everything's queued in to automatically calculate right now. So if you start changing things, it can mess that up.
Right.
So, there's that.
okay. All right.
But I'll have them
perfect.
send it out for you. No problem.
Thank you so much. Appreciate
welcome.
it. All
You
right.
too.
Take care. Bye-bye.
You too. Bye-bye.
Bye-bye.
Bye. Okay, that looks like everybody.
I'll leave as soon as I can find the button.
That's okay. It should be at the bottom where it says leave meeting, is what it should say.
I know. And oh, leave. Duh. My chat block was covering.